Hi everyone, welcome to the webinar. I want this to be for the most serious of people, the most serious of traders. Let me know you can see and hear me. I'm going to make sure I can see you on the chat board. I've got a whole bunch of new slides. I always try and simplify the essence of all my education, all the 18 odd books on trading I've written, the 200 columns for the Financial Times, all the TV shows on Bloomberg that I've done. And that's the idea of this webinar. It should be the one and only, the last one you ever need to watch. Okay, the last one you ever need to watch. So in that regard, let me know that you can indeed all see and hear me. I see you can. And happy 2020 to everybody as well. Delighted to have you all on board. It's great. It looks like sound and everything's working. So we're going to kick on. Like I said, the reason I did the webinar today is because I get really passionate about how do I simplify trading? I'm always thinking, how can I make it even simpler? How can I make it even easier? How can I make sure even more people learn to do it? Because for me, it's been about social mobility. Yeah, I didn't grow up with a silver spoon in my mouth. I grew up in the north of England, and I wanted to get ahead. So I taught myself how to trade and invest. So I taught myself finance first, and then I'm going to show you all of that. I'm going to compress it, like I said, into 90 minutes. So it's the most invaluable 90 minutes, because if you've given me the honor and privilege of giving me your time, the least I can do is to make sure it is absolutely invaluable. So make sure you've turned off the TV, close the door, try and make sure nobody else is using the internet, because if they're downloading Netflix movies or whatever, you're not going to be able to get a clear picture on this webinar. And it really is going to be worth your time. Grab a pen and paper. Get something to drink as well, some water, hopefully nothing alcoholic, I don't think, but a notepad and pen as well. You're going to want that. You're also probably going to want, just in case, although I'm going to give you the best bits of the slides in this, but just in case, a camera phone just to take some shots of the great information I'm going to give you as well. Wayne, the answer to your question is later this month, and I'll email you, my friend, as well. Everybody's on, everybody's excited. I can see you're all ready and raring to go. So we're going to kick off with a little poll first, and I like to do this just to get people limbered up, you know, a little bit, make sure they're not just sitting back going, yeah, I'm going to listen to him. No, I want you interested and excited, and let's start off with the screen share, okay? Let's start off with that. Here we go. You should be able to see the screen that I'm sharing with you. We want to spend all our time trading our profits, okay? We want to spend our time spending our trading profits. We do not want to be spending all our time looking for those trading profits. We do not want to spend all our time sitting in front of a computer screen. We want to be spending our time out in the sales and whatever else it is. Okay. Now, I appreciate that. I know that's why you're all here. So that's what I'm going to do. And where am I going to get all my information from? Just so you know, it's not just, okay, it's not just as you'll have seen me on the BBC very often, I'm sure, or on Bloomberg TV where I had my own show, or on CNBC where I co-hosted. When you're good in this industry, when you're good as an asset manager, my asset management company is called Profinium Partners, and we launched it in 2004. When you're good at this, you're on air a lot. You get a lot of publicity, you get a lot of airtime, a lot of coverage. I don't mean those sort of little slogans people put on, like, as seen on CNBC. I'm talking about your own show. That's what I'm talking about, okay? So I'm going to give it from my own experiences as a hedge fund manager. Okay, I was a private investor, first of all, 20 odd years ago when I was a student. I then left my career as a lawyer. And trust me, as a lawyer, you're guaranteed to make millions. But I thought, no, I'd rather have the freedom and the fulfillment that being a hedge fund manager brings. So I left all of that, set up my own fund after meeting some of the world's leading traders, which I documented in my Financial Times columns and in all my various books. So that's going to be the source of my information today. It's going to be all my various books, there's some of them there, which were published by Macmillan, the Financial Times, and so on. My own expertise. Now, why is it important I tell you this? I'm not telling you this so you think, oh, wow, yeah, you've done really well, Alpesh. That's not why. Okay, I get enough pats on the back. The reason I'm telling you this is because there is so much junk on the internet. There is so much nonsense and noise, and I've yet to come across a regulated hedge fund manager. I'm talking about one who is actually regulated and is actually entrusted by pension funds and sovereign wealth funds to manage capital. Okay, and the reason I say this is I'm yet to come across one of those who talks to private investors. They're all very happy to talk amongst themselves as institutions, but they don't want to give up their time to talk to you guys. They don't want to write the books and all the rest of it. The reason I've done it is because it allowed me to, first of all, capture all that knowledge and then share it. Okay, because that was my journey. And the Financial Times absolutely loved all of this. And that's why there's so many, they keep coming back for more and more. Oh, you do another one, do another one. The public love it. Will you do another one? And hey, I have got an ego, so I do like seeing my book on a bookshelf. I've said that. Michael Bloomberg said it as well. This is not a plug to buy the books. Don't buy the books. I'm going to give you the best bits in this webinar anyway, so you don't need to buy them. But I'm telling you where the information is coming from. This is incredibly important because there's so much rubbish and noise and fake news on the internet. All right, so let's start off with what trading is about. Well, trading, as we know, is just about these two things. It's really sounds simple, looks simple. It's about knowing when to buy and then when to exit. That's it. At either a loss or a profit. Yet we know 75% of private investors get this wrong. 75% of private investors can't make money, despite the fact that it's simple as this: when to buy, when to sell. You, me, George Soros, we all get the same data. We all, thanks to the internet, now get the same information, and yet they don't know when to buy and sell, or they just get it wrong. So what are they getting wrong? Why they get it wrong? By the way, speaking of, will the FTSE be higher by the end of 2020? 72% of you have said, yes, it will. Well, you're very optimistic and bullish. I'm pleased about that. I think as things would go into 2020, I think you're right. But we shall see as things go on. By the way, everybody tell me where you're from as well. Hi, Raj, Richard, Cliff, Sylvain. We've got somebody who's put their name down as Alpesh Patel. Pack it in. All right. Wayne, James, unless there is an actual Alpesh Patel who's on this. Wayne, Michael, Anil, PJ, everyone else as well. Okay. Schneider, my pleasure. Derek, Lanu, Malik. I'm not going to go through everybody. Franz, Fred, Martin, Michael, Wayne, Sadi, Jan. All of you, thank you very much. Fred, I'll answer that in a second. It's a lot for me to read while I'm talking, but I will answer that in 1 second. Okay. Okay, so I'll come to that. Thank you very much. Now, given that situation, look, what we're trying to do, and this is just to make sure everybody understands what we're trying to, all we're trying to do with our trading is have a simple process so we're not stuck in front of a computer screen. See that green arrow? Whenever you see that in this webinar, that means to buy. Now, how do we get a strategy which will tell us when to do that? Look how we're not getting in at the bottoms of the markets or at the tops. And the reason we want to be able to do this is because we know the markets are probably the most accessible place to set up as an entrepreneur. And by that, I mean, you don't need office space, you don't need warehouses. So it's the least expensive way to set up, as expensive as long as you're not gambling and you don't mess it up and do it the wrong way, to set up on your own to try and make a fortune. All right, that's why people get interested. I mean, let's not kid ourselves. It's why you're all here. I can't guarantee people are going to be making fortunes. We're going to need to get a business plan for that, which we're going to do in this webinar, and a strategy, a process, so we can find trades like this. Okay, trades where, okay, how do we know when to sell? Sell high in case the markets are falling. So if there's a market crash, we don't care. Martin from Slovakia, beautiful Slovakia. Welcome indeed. Simon, Raj. Oh, you said my face is only half visible. Yes, I apologize for that. You know why? It's because I've made the screen a bit smaller. I know it's only half visible. I apologize for that. I will try and move the camera around. It's just because the way it moves things, compresses things. I'll try and do this instead. I'll move across. Okay, it's just how things are set up on computer systems. Now, right? Now, we'd all like to have big, winning, profitable trades. Look at this one. It was only small and tiny, and sometimes they're small and tiny. So we need to know when to enter. We need to know when to exit without being screen slaves so we can enter the trades and walk away. And the reason this image or any of these images have excited the hell out of me since I was 12 years old when I first came across all of this is because it was a level playing field. It meant anybody from a 12-year-old kid to a 70-year-old grandmother could enter the markets, initially demo account, just look at and observe and see if it's for you or not, and then start slowly. But it was a business. Write that down on that piece of paper, the notepad I told you to grab. Trading is an entrepreneurial venture. That's why we should be excited. If we're looking, and the start of the year is even a more important time to get excited. The reason I wrote books like this, don't buy the book, honestly. Like published by the Financial Times, as you can see, international bestseller, trading online, massive thick books, okay? Don't buy it, it's out of date. I'm going to give you the best bits in this webinar. The reason I wrote all of that is because of the passion of it all. It blows my mind that anybody can walk into the markets and all they've got to do is make two decisions: when to buy, when to sell. and they could gradually build up their capital. Okay, obviously not everybody's going to go from being a private investor to setting up a hedge fund. You really need serious passion to set up a fund and raise capital from sovereign wealth funds and pension funds. And investors in our funds are people like Aegon, the pension fund, and AXA, people like Tom Singh, the founder of New Look, Karan Bilamoria, founder of Cobra Beer, people like that, high net worths and so on, family offices. My point is, you don't necessarily want to do that. You just want to have a little bit of extra side income. So I've been in the business of trying to get this across to people through the FT comms and so on, and that's what I'm doing. Okay, so hopefully I've got you all excited. If I've got you excited, put it in the chat box. Yeah, you're excited. You should be, because without the excitement and passion, 2020 ain't going to work out. Okay, the reason we want to be excited and passionate and carry that forward into this year is because, look, if we can simplify the process, we're not trying to be right all the time. If we can simplify the process and we get into things, then that is, as somebody once put it, the easiest hard money you will ever earn. Easiest money because, look at it, I'm sitting in a warm office, for God's sake. Hard money because, yeah, there's a skill involved. There's a skill we're going to need to learn. All right. And we know, let's be humble before the markets. We know, because we see the brokerage warning, 75% of private investors lose money. Write that down. 75% lose money. Okay. No, Schneider, this is it. We don't add on extra stuff onto looking at the indicators. So when we look at these signals and our processes, we don't then supplement it with additional things, because we're all about time efficiency. Okay, and what will typical trades look like? Let's be absolutely clear. We're not going to win all the time. We're not trying to win all the time. Christian said, when are we starting the webinar? Okay, let me just type this in, and people haven't realized. Webinar has started. Look for the link or refresh page. Sorry about this, people. I'm not sure why he's written that, but I'm assuming if one person's written it, there's 100 others who have written it as well. Okay, so I better just let him know as well. Okay. Anyway, now to the rest of you. Enough of that sort of diversionary stuff. I'll just end that poll. That's happened. Let's reset that poll, and we'll do another one just to, again, get you all in the mood regarding this. Okay, so some wins are going to be small. Why people sometimes ask, Alpesh, why aren't they all big winning trades? They're not. Even if you look like somebody like Jim Simons or some of the people that I interviewed for my books, when I wanted to be a trader, I thought I better meet the world's leading traders. So I thought, if I write some books, they'll meet me, and they became my mentors that way. And that's how I got educated. I'm going to share that with you, and that's the passion for me, to share my know-how, just like Richard Branson likes to write every day about entrepreneurship, because when it's a passion, you want to talk about it. It's not because he expects you to go and buy a Virgin Airlines flight every day. It's just that it's your legacy, right? Okay. So what I want people to do, some are saying that they're not able to log in, not sure why. Okay. What I want people to do is appreciate that we're going to make trading a lot simpler. In other words, we're not going to try and be right all the time, because we can't be. We're not going to try and be better than the big banks who've got a team of analysts sitting behind them. We're going to just try and do it in a way which is suitable to a private investor. Because if you could destroy Goldman Sachs, they wouldn't exist, would they? You're not going to try and outsmart them. You're going to just ride on their coattails. All right. So you might not make as much money as they do. Well, they might have made 100. You might only make 80. Okay, well, that's fine. That's enough, isn't it? I've had, let me just put this up. So, right, that's obviously the case. We're going to do it in one sense like that. We're going to keep it simple. Now, let me continue. Let me also tell you some home truth about trading is going to be like. See this down arrow? That was obviously a sell signal, and the red cross told us immediately afterwards to sell. And then this one comes in as a big trade. So let's just talk about some of the proportions of what trading is actually going to look like. First of all, we're going to profit from price rises and price falls. I did some data analytics and then Barclays Bank launched a book of mine about 3 years ago. The CEO of Barclays UK, Ashok Vaswani, did the book launch for me, which was very generous of him. And we took this data to see, what if you hold certain positions over a certain period? Are you likely to lose money? What if you held them, were long positions better than short? Is it better, were men better than women? Were there certain times of the day, hours of the day, time frames of the day? Are you better off trading sterling or dollars or whatever else? Okay, so having done all of that, I'm going to share that with you. And the benefit of that is, as this screen also shows, is any decent strategy, like the strategy I'm going to show you, okay, should if there's any losing trades, ones which aren't going your way, it should be such that losses are small in size and short in duration. They're small in size, short in duration. Okay. They're small in size, short in duration. So that's going to be the essence of our strategy as well, because we're not going to promise that we get in at the bottom of every market, every trade. And we're not going to say, oh, if you draw this line, then look at this, and then the market's doing this. We never care. And write this down. And I'm not the only person who said it. I'm going to show you one of the world's richest men, who happens to be a trader, what he said, which is we don't care about the why. We're not here to try and understand why the market moved in a particular way. We are just trying to buy low, sell high, or sell high, buy low. Both things result in profits. I'm not going to draw these lines and say, hey, yes, if we do trend lines and support lines and blah, 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 blah. Okay, what we're going to do is use more modern technology. And every time I do these webinars, it's so funny. All these sort of scam artists on the internet, they copy the things I say. So now there's a whole backroom saying, oh, yeah, no, trend lines don't work anymore. Now these indicators work. Let me tell you what works. You know, they sort of trying to keep up with what a professional hedge fund has been telling them for about 20 odd years. But, you know, it's nice to know that they're actually listening to what I'm saying. My point is we are going not to care so much about why things have moved in a particular way. We're not going to try and analyze the markets. We are going to ride the coattails, and we're not going to get in at market bottoms because we don't have a crystal ball, but we are going to make ample profits, as I'm going to show you. We're also going to remove bad practice. Bad practice is things like, and let me tell you what happens, the difference between winners and losers. Winners are the profitable traders, losers are the losing traders. And when we did all this analysis from all the data from all these private, from these brokerages who gave us this anonymized data for my book, what we found is that the winners, when they had a streak of losses, so imagine you're tossing a coin, you get 3 or 4 tails, and call a tail a loss. When they had losses, the losers, what they would do is they'd add to their losing position. Losers add to losers. The winners never added to their losing positions, or very rarely ever added to their losing positions. There were certain best practices that you can do. Now, put your hand up if ever you've had a losing trade and you've added to it. Now, some of you might be beginners who've never traded before. Don't worry. What I'm explaining will all make sense as we progress. Okay, how many of you have added to your losing positions? None of the successful, not only the fund managers, the professional traders who are trusted with millions and millions of other people's money, do they ever add to losing positions? Okay, they add to their profitable ones. So there's little bits of best practice I'm going to give you. What you're basically going to learn, I'm going to give you a bit of a guarantee in a second, that in the next hour or so, you'll be able to consistently generate profits from your trading. Not every trade is profitable. I'm talking about consistently over a period of time. So over a month, over 2 months, consistency in that regard. Not every trade is winning, like I've said. Okay, a coin is 50-50. We're going to try and have a little edge over a coin. No, why are you not trying to be right all the time, Alpesh? Because I'd be lying to you. As a professional hedge fund manager, I'd be laughed at if I said to anybody, oh, we're right all the time. That's how we're better than other people. We're just more accurate. No, we're not. We just have certain best practices. Just like a professional tennis player, we just have certain best practices, which I'm going to share with you, which I think are learnable. These are learnable skills. I wasn't born a trader. I didn't come out of the womb thinking, hey, give me a screen, mom. Okay, it's learnable. Okay. So I'm going to show you, Schneider, I'll come to that great question in a second. And if you've never traded before, you'll have a template to follow. Safely, responsible trading, okay? Safety and responsible trading. And I'm going to give you a guarantee. The guarantee is this. You're going to get about 60 to 80% trades, which will be profitable, right? The terms over this guarantee are this. Over 20 trades, you can pick whichever currencies you want. I'm going to focus on the 1 hour time frame. You can take up to 30 days, and I guarantee you with the methodology that I'm going to show you over the next 30 days, you will have 60 to 80% profitable trades over 20 trades. So don't just do one and go, oh, it didn't work, Alpesh. Okay, and you need a time frame. Well, let's take the next 30 days. All right, that's the time frame we're going to take. Right, that's what we're going to do. And I'm going to show some trades at the moment. Obviously, the market's closed at the moment, but I'll show you the ones which are open for tomorrow and so on. You do not need to use real money for what I'm going to show you. You could just monitor the trade. So there's risk-free. I'm going to show you a strategy. It's one of 10 that we use in our hedge fund. It's a simplified, stripped-down version of it, which is still relevant for private investors. It's stripped down so private investors can use it. And it was taught to me by one of my mentors, a chap called Bill Lipschutz. You can Google him. He was hedge fund manager of the year in 2016. He was in my book, The Mind of a Trader, where he was chapter 1, actually. Of that book. Okay, so just so you know. Now, people often ask, Just tell me a bit about the other people in the audience. You know, what's happening, right? What do they trade? Why do people trade? When we've done polls, we've found these are some of the most important reasons. 80% have said to make the mortgage and rental payments. A really high proportion have said because they enjoy it, and 29% said to top up a pension. All right. It wasn't just one answer you could give. You could give multiple. And these were some of the key responses that we had. Almost half are between 25 and 45. Doesn't matter. I've got people I've trained up who are 90 years old. And I've got others who are 18, want a career in the city. And they say, hey, can you help me learn? Okay. And 75% are up for using mentors, advisors such as myself. Like I said, there isn't another regulated hedge fund manager who does this. So if you want opinions on any people out there in the market who claim to be professional traders, let me know, because I'll tell you from the Financial Times investigation we used to do in my column, my Diary of an Internet Trader column, there's so many bullshit artists out there. Okay, 85% trade with a day job, by the way. All right. Milos has asked, nobody teaches about how to raise capital for trading. Absolutely. Happy to discuss that in the Q&A, my friend. Happy to discuss capital raising, because that's the more difficult thing. First of all, you know, how you do it and how we've done it for our fund. It's not the purpose of this webinar, but yeah, capital raising is something I'm happy to talk about. It's more for a professional audience, but I'm willing to discuss it. Winning traders. How do they trade? We found that 50% actually trade in their local time, between sort of the local hours in their local time. That doesn't necessarily give them an edge. We didn't really find, this is what we found people were doing. I'm going to tell you which hours I think are best in a second. 87% of the profitable traders, the winning traders, the 25% who are profitable, 87% of those added to their profitable positions. Well, how do you know when to do that? How much money can you make, Alpesh? What if you're starting off with just $1,000? All right, well, wait a minute, Alpesh, what if I'm a really experienced trader? I've got $1 million I'm starting with. Where should I start? How do I break up the risk, and so on? Added to losers, 9%. Very, very few profitable traders added to their losing positions, and quite frankly, they shouldn't do. We've never seen that work out well for people, other than if they were just lucky for a short space of time. Their trading plans, 41% said they intend to trade more products than they're currently trading. That's fine, just out of interest. 37%, I'll tell you which products I think you should be trading for 2020 in a second. 37% said they expect to increase their trading over the next 12 months. Well, I'll tell you the optimal amount of time you should be trading, because if you trade too frequently, you're a slave. If you trade too infrequently, well, you're not making any money because you're hardly placing any trades. 82% said they intend to do it for the rest of their lives. Good. I hope so. I hope so. Okay. And these are the other numbers. 77% spread bet. This isn't just for UK audiences who want to spread bet. Some trade CFDs. I prefer CFDs because I think that the prices you get are better, but I'll talk about which are the good brokers in the Q&A section as well. And 10% want to make it into a trading career, and I'm happy to help them as well. In one sense, this is what we're talking about, okay? You're going to fall into one of these categories. Now, some of you might say, no, we've got shed loads more capital than 10K, Alpesh. Are you kidding me? We've got tons more money. By the way, will the Dow be up by the year end? 54% said yes. I think Trump's going to win. I'm not going to go into why. And I think that's actually going to help the stock market. It's at an all-time high. I think it's going to fuel it further. Now, I could talk about that later. We can do that in the Q&A if you really want me to, okay? So we can do that in a little bit later. I'm just going to put another capital thing there. Now, what I recommend people do, you can write this down, then I'm going to break this down why I think you should be doing this. 1K capital, 5 trades per week. Risk per capital, so on any one trade, risk per trade, $30 you lose. How do you know? And this is the kind of returns we should be looking for. All right, again, for 5K, that's the number. So how did I come up with these numbers for a business plan? That's what I'm going to break down with you, and then I'm going to break down when we know when to buy, when to sell, so we can start generating some income. Now, if you've got more than this, you've got multiples of 10K, then obviously you can do more of this. By the way, if you want to make more money, it's really simple. You increase the number of trades, but the downside is, and listen to this, the downside is if you increase the number of trades, you've got 2 downsides. It's going to take more time to increase the number of trades. You might not want to take more time. You might say, Alpesh, you know what? I'm happy with the profits I've got because I don't want to spend more time in front of a computer screen. That's fine. And the other thing is you might end up doing lower quality trades because you're trying to do more trades, and there's only a certain number of times the market trends and moves. Okay, so what we're going to look at in this webinar is, okay, how do you choose what to trade given there's so much choice? Look at all this on the left-hand screen. Given there's so much choice, this might look complicated. Trust me, I'll simplify. It's not complicated at all. There's somebody doing some Facebook adverts at the moment showing a screen like this, going, oh, it's too complicated. I'm going, bloody hell, seriously? That's like saying driving is complicated. I'll simplify that so it becomes second nature to you anyway, all right? So What we can do is we can increase the number of trades with those two caveats. We don't want to spend more time in front of the screen, however. So there's always a payoff to make more money. Time is one thing and quality of trades is another. People who get rich because they have more opportunities, and they pick not every opportunity going, but a few quality opportunities and put their money into those. And that's what trading is. We're going to do that. We're going to scan to make sure we've got the optimal number of opportunities that as a human you can take, and we put the right amount of capital in, not too much that if any one of those opportunities blows up, we blow up, but not so little that if we get a really good opportunity, well, we put too little in. I mean, how many of you have ever thought with the trade, oh, I wish I put more money into that one? And how many of you thought with the trade, oh, I put too much into that one? Okay, so we're going to get that right balance. There is a formula, as you'd expect. For those of you who are mathematically or engineeringly minded, the Kelly formula will do a simplified version of that. Okay, I won't go into the details of it, but it's common amongst hedge fund managers now. The risk per trade, well, if you want to make more money, you could increase the risk per trade to make a greater return. Guess what will happen? With risk comes greater reward, but obviously comes greater risk. Okay, so it depends what you can psychologically take, but we'll break this down into our business plan so that we can easily achieve it. So you could go from 200 to 400 if you want. Now you might say, well, wait a minute. With those kind of returns, we should have our own hedge funds, Alpesh. The problem is the level of risk you're taking as a private investor is far greater than a hedge fund would ever be allowed to take. That's why our returns don't get to 200% because we wouldn't be allowed to. You as a private investor with your own capital, that's fine. When you work trading with other people's capital, they won't ever let you take those kind of returns. And the reason is, and you might say, why not? They're stupid because you could make so much. No, they're not concerned about how much you could make on the upside. They're concerned about what happens if you have a string of losing trades. Right? And that's what I'm going to show you. That's actually the constraint. Now, for you, because it's your own money, you might not care. To me, when I'm managing other people's money, they'll be on the phone if I have a string of losing trades. That's why we have to limit returns in one sense. Because obviously, it's very easy. Oh, but if you want to get a great return, yeah, just put everything tomorrow morning into, for argument's sake, sterling. There you go. Bigger return then, if it works out. Yeah, overall, we know we're profitable, so it should hopefully work out. No. Too many eggs in just one basket. So we're going to look at that great constraint of what if we have a string of losses. That's your constraint, okay? Now, constraints to one side, let's start talking about what your ambitions are for 2020. Listen, trading can be that new job. It can be that side gig. It was for me. Get the trading bit right, and it's amazing how many of your other resolutions come to fruition. We're going to do it in a way where we're not screen safe, so you're going to be enjoying life a lot more. You'll have more money to save. Guess what? You'll be able to afford gym membership, right? So you're going to lose weight. I don't know about quitting smoking. I'm going to make sure it's stress-free, so hopefully you won't need to smoke. Drinking less, well, if you're happier, hopefully you'll be drinking less. I know there's not necessarily a correlation. That gym membership. Find love, well, there's something attractive about wealthy people, isn't there? Take a trip, yes, of course, and pay off debts. Now, I'm being a little bit sort of facetious. I'm trying to be a bit funny. But my point is, for me, this was the greatest entrepreneurial journey, which is why I'm sharing it. And it was an entrepreneurial journey which answered so many other questions, so many other resolutions, so many other things in life. Sort of getting this one block right helps solve all the other blocks, okay? But this is how the journey started off. This is why when I first started off trading and it was like this, that's when I decided, okay, I better meet some of the world's leading traders. That's why I wrote Mind of a Trader, which, like I said, fortunately for me, the Financial Times published and allowed me to go and therefore become better at trading by getting their mentoring. All right. By the way, in terms of risk capital, what have you guys said? I've got some people, a fifth of you are just looking. The vast majority of you are up to about $2,000. That's fine because I'm going to give you a business plan for you guys. Then I've got people from $2,000 to $5,000, got a business plan for you. Up to $10,000, got a business plan for you. And over $10,000, you just do a multiple of what I'm showing you. But you always start off with the demo account when trying a new approach and the approaches that I'm talking about, okay? Shoki said, how come you not heard of Burton? I have heard of him. I've heard of him somewhere on YouTube. I'm talking about somebody who's been around and manages capital. I don't mean somebody who's just once got on air. I'm talking about somebody who manages capital for 20 odd years, Shoki. That's why I'm talking about somebody who's trusted to talk about the markets to an audience of 300 million, not be on an episode of a TV program now and again, which, well, you know, sometimes when you win, anyway, we won't go into that. Right, so we're going to go into some of that. Sadi, I'll answer your question in a second. Ray, how do we know which signals are best? We treat them all equally. in this, but I'll show you how we can narrow that down if we were to get two equals signals in a second. Okay, best practice, what we're going to look at, what I want you to look at, what we found for private investors, because it's not just what the big funds do, because we want to copy what the big funds do, and then we want to do it, okay, ourselves as well. What we want to do is this, right? We want to be trend following, which means we're looking at these trends. You can see them over here. We're going to be trend following. Right, this is it. This was taken from today, actually. Bang up to speed. This is the FTSE. What we want to do is that we're going to use algorithms to try and remove emotion. So we've got a process. An algorithm is just a process. Okay, we're going to have a process, an algorithm. That's what we're going to do. Anybody who is good at their craft, who is speaking to you, who is wanting to teach you, they will have been found by the market. They will be found by pension funds. They'll be found by the Financial Times. They'll be found by the BBC, by Bloomberg, and they will be given offers to manage money, which is how I became a fund manager. It wasn't my idea. Others approached me. Okay, they'll be given offers of their own shows, which is how I got my Bloomberg one. We get offers of their own TV, FT columns or newspaper columns, which is how I got mine in the Financial Times, the Diary of an Internet Trader, because they'll say, hey, you're good. Will you write a weekly column? If they don't get that, okay, then it usually means they're bullshitting you. Because think about it. Nobody turns away in the business of making money the idea of making more money. All right. Okay. It's as simple as that. Dave said, is there any way to enlarge the screen? I think, Dave, if you remove the other stuff like the poll, that should be a way of enlarging the screen. So if the poll is in the way, there's a red box with 3 white dots. If you just close that, that should make the screen bigger, my friend. Hopefully that's what makes the screen bigger. I don't quite see what you're seeing, so I can't tell you off the top of my head. Okay, let me reset the poll, so that might help keep the screen bigger for you. It should make it a bit bigger. Okay, so this is what we're about. We're also about adding to our winning positions. That's part of the strategy. I'll explain that, and I'll explain VSL and VPS as well. Now, if we're not going to be at the screen, we need a way of exiting, either a profit or a loss. So we'll use a trailing stop loss. That doesn't mean we're exiting at a loss, because if the price goes up and up and up, we might be exiting at a profit. And if we are at the computer, then we'll use the system to tell us, oh, our original rules are no longer in place, so we exit. Now, what I want you to see about this, observe about this, notice how we didn't get in. That green arrow wasn't at the bottom of the market. That red cross for this short position wasn't at the bottom of the market. We get in and out at high probability areas. Could we be better? Yeah, we'd be better if we had a time machine. All right, but we don't have a time machine. We don't have a crystal ball to see into the future. All right, so guess what? We get in at higher probability trades after they've started moving a bit, once somebody else has moved the market. So how do we find those? That's what we need to cover. So let's do 2 parts of this webinar. Let's do the business plan, so we know how much money we could be making, because without a business plan for 2020, you're not going to hit your goals. If you don't have a plan, you can't hit your goals. That's the first thing. And the second thing is then let's look at the strategy. Let's put all this best practice together. How do we know when to enter? How do we make it into a process? How do we make sure we're not stuck in front of the screen all the time? Right? That's what I'm going to do. So in a quick business plan, let's say you do 20 trades this month, for argument's sake. Let's say you do 20 trades. Just bear with me. Let's say you're a bit better than a coin. Out of those 20 trades, 60% are winning. So 12 trades are winning. And let's say you make 45 points or pips, whether it's CFD trading, spread bets, doesn't matter, when you win, and you lose 45 when you lose. So I'm not making some grand assumptions, which all these other people will love telling you, you know, the Charlies of saying, oh, we're right all the time, guys. And when we're right, we'll just make a killing. Bullshit, right? Let's assume you're just a bit better than a coin. 45 pips when you win, and you lose 45 when you lose. Okay, so that being the case, what are we left with? Because that's very basic, humble assumptions. Okay, very assumptions. Sardine, not yet, but there will be in the future, right? Now, so that means 12 wins, 8 losses net out of 20 trades. You had net 4 wins, 12 minus 8. Okay, so you won a net of 4 times 45 pips, i.e. 180 points is what you gathered net across 20 trades. Okay, on those very humble, basic assumptions. The question therefore becomes, how do you make £1,000 or $1,000, right? Or 1,000, whatever currency you are in. Well, the question you've got to answer is, what if you had 3 consecutive losing trades? That's the constraint people don't realize. If trading was all about being right all the time, all you would do is mortgage your house and just keep shoving every penny you could. So how come people don't do that? How come even the richest traders in the world don't just get lent $1 trillion from Apple and told, here, just put it all on red or all on black? How come? I mean, surely they're so good. They've got a track record. How come they don't give it? Because we don't know if the next one will replicate what's happened before. So we've got to look. What if we had not one losing trade? What if we had 3 consecutive losing trades? Right? So let's break this down because this is real. This is how it actually, the thinking process happens. So how do you make $1,000? Well, what if you had 3 consecutive losing trades under those assumptions? Now, if you have 3 consecutive losing trades, remember a losing trade is 45 points. 45 times 3. 135 points. Now, this business plan is really important because this is as simple as I can make it, and it's going to be the bedrock of how much money you make in 2020 for the next 10 years. Okay, this will be the starting point. This is this kind of stuff which blew my mind when I, published it in my books and in the Financial Times columns, and the FT said, "Oh, everybody loves this. Yeah, you're really giving the nitty gritty." Okay, so really pay attention. Write it down if you want. What if you only want, if after you have 3 consecutive losses, to be down 20% of your total capital? What if you say, now you might say, no, Alpesh, if I have 3 consecutive losses, I don't mind if I'm down 50%. That's fine. That's personal taste. I don't recommend it. Okay. I say 20%, pretty large chunk to be down after 3 losses. But let's just bear with those numbers for a second so you understand the interrelationships of how money is made. Okay. How money is made and how risk impacts all those things, so we get a realistic business plan, not those bullshit ones where somebody tells you, hey, do really large trade size, you're going to win all the time. If after 3 losses you want to max 20% loss of 1K, that's a maximum of £200. You want to be down only £200 if you have 3 consecutive losing trades. So what's the math? Then that means each trade should be 200 divided by 135, because that's the 3. If you have 3 consecutive losing trades, you'd lose 135 points. That wants to be £200. Therefore, you would trade, whether it's CFD, spread bets, futures, whatever, the equivalent of £1.50 per point. Now, some people get a bit confused at that. Don't. I've simplified it as much as I can. But if you do get confused, ask me later. All right. I'm even going to give you a WhatsApp number. You can and a link. You can have a phone conversation with me 1-to-1 if there's any bits you don't understand, because I'm committed to making sure people get this. Okay. Because for me, trading, as I said, was social mobility. Education is social mobility. So I'm going to give you that number at the end as well. So 180 pips in profit. Right, remember what I told you, times £1.50 is £270 profit in the month, okay? Why did you only do £1.50 per point? Why not more? Because like I said, you only wanted to have 20% loss if you have 3 consecutive losses, right? So you did £1.50 per point on those figures that I've given you. And here we only assumed we're right a little bit more than we're wrong, 60-40, all right? 60% of the time, 40. Now, so you need 4 months to make £1,000, because 4 times £270 is roughly £1,000, right? So you need 4 months. There you go. How long does it take? You need 4 months. Now, let me tell you something. If as a hedge fund, after 3 losses, we were down 20%, we'd be shut down. Just so you know, because people go, wow, why doesn't everybody do this? We'd be shut down. Why? Because people would panic. I mean, those are the numbers. They'd panic. But you as a private investor might say, I don't mind. I'll take those numbers. Okay, fine. Okay, I'm going to actually tell you to take slightly less risk. I'm going to tell you to do half as much as that, right? That's my personal opinion, right? Because nobody's going to turn off the market. But some people, they turn around and say, no, Alpesh, stop trying to slow me down. Get off me, Alpesh, I want to get in there, right? So if you wanted to double that money, or you wanted to do it in half the time, well, you'd just double the risk. You'd do £3 a point, obviously. But you could be down 40% if you have 3 losing trades. I don't think you should be down 40% if you have 3 consecutive losing trades. However, you could make your return of £1,000 in 2 months. Now, the reason I don't want you to be in a rush, I know what you're all thinking. Shit, he's the first guy we've heard who's actually telling us to slow down, trade less, trade smaller amounts, and take more time. What's wrong with this guy? He's a professional. That's what's wrong with him, right? The reason I want you to take more time is this. Nobody's turning off the markets. Right? When you do it professionally and you do it gradually and slowly and build up slowly, you're more likely to succeed. Now, I'm not going to go into how we know that, but when we've done it with our team, our hires, our company hires, the people who work for me in my company, that's what's happened. When they've started smaller, and by the way, we don't start them with large sums of money because they're fresh out of university. I'll introduce you to one of them later on. Just to know me, okay? They're fresh out of university, and often they've not studied finance. They've studied things like English literature, as Naomi did. We give them $1,000 to trade with. Why would we give them 10,000 or 100,000? What, do we look stupid when somebody's never traded before? No, we start them off small, all right? But yeah, there's another reason, and it's this. If you can make 1,000, you've then got the skills to make 2,000. You've got 2, you can make 4. If you can make 4, you can make 8. The reason I say this, and the reason this is critically important, is this. It then becomes a scalable business. So this is your quick, short-fire business plan. All right, it's very quick. It's very short-fire. If you've got any issues with it, I'll give you the number. You can WhatsApp me on. You can call me on, and we can talk it through if there's any bits you didn't understand. All right. Now, there's one thing I need to ask you all. And I'm going to ask you this. If I promise to continue giving you great content, we're going to talk about the strategy next. Okay, do I have your permission to take 10 minutes right at the end to tell you about the technology my hedge fund is going to float on the stock market? We're getting venture capital investment for it. We think it's the Google of trading. It's some technology we've created, was spun out from the fund because, as you all know, the technology companies are becoming billion-dollar businesses, not the hedge funds, because there's too many of us competing for capital. I'm up against Goldman Sachs, and we thought, why don't we spin out some of our technology? It's fantastic. And then float it in the stock market. Anyway, so can I tell you about that right at the end? Right at the end, you don't have to stay for it, but I'm just saying, okay? I want to be able to do that. It's my passion. It's like when Steve Jobs talks about the Apple iPhone, all right? The one thing which worries me the most, which is out there, is the bullshit bad education, which is out there. Thank you, everybody who's saying yes, 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 right? It makes you fail because it's teaching you the old way. It's teaching you Fibonacci and Elliott. Somebody earlier on mentioned Fibonacci and Elliott and all the rest of it. We live in the age of computers. All that stuff might have worked 10 years ago, 20 years ago, 50 years ago, 100 years ago. Japanese candlesticks, for instance, it doesn't work now. It doesn't work. And if you want proof, don't take my word for it. These are some of my favorite books from 2019, and you should read them for 2020. And they will tell you that the methods you're being told by these other numpties are bullshit. And I'll tell you why. Take a picture of this if you wish, all right? All of these were centered around the fact that these old methods you're looking at don't work, all right? They don't work. This is the one I'm going through at the moment, which is just one of the best things because Jim Simons is an absolute legend, all right? By the way, this book is the only one which is not specifically about trading. What it is about is the fact that there are certain professions, and trading is one of them, where you don't need to be a surgeon in order to do it. You see, with being a surgeon, you should be a surgeon before you do open heart surgery. With trading, you don't need to. In the same way, you don't need, in order to watch television, to know how TV works. You do need to know certain basics, and that's why with trading, I can teach you the essence of it in 90 minutes, and then what you've got to do is practice and get on with it. So, okay, so I'm just going to share that with you. Now, this is the choice of products. So how do we know what are the best products today? There are 300 Forex pairs. Did you know that? You're not going to be able to watch all of these. There's 60 global indices, 90 commodities, 9,000 shares in ETF. And each of these might be trending at any given time. So how do you know what to trade, when to trade? Okay, these are some of, based on my experience, I'm not going to argue about it now. These are some of my favorites for 2020. Okay. All right. I know, Sadi. I know. Okay, the best products for momentum, trend following, I think, based on my experience, I'm not going to go through why, but I think it's partly to do with it. It's something with Jim Simons, the founder of Renaissance Technologies, who is the most successful fund manager in the world. He's actually more successful than Warren Buffett if you look at his annual returns. It's just that he started when he was 50 in the markets. He started when he was 50. If he started when Warren Buffett started at the age of 12, he'd be all right. Anyway, so for the last 30 years, he's made more returns than Buffett. That's not to take away from Buffett, but my point is, the point is that some of these products, because they don't have so much money going long and going short and all the banks trading them, they tend to have stronger trends. Anyway, that's some of my starting points, right? That's what I'm going to talk about. I'm not going to go into this bit, but as well, let me just update you very quickly. Trading is just about, it's one of these 4 things, all right? Either the markets are going to go up and up, they're going to go up and down, they're going to go down and then up, or they're going to fall and fall. In those 4 scenarios, you're going to do everything different to what I as a professional are going to do and what all the best hedge funds are going to be doing as well, okay? No, Michael, these are the ones, I'm not saying long or short, I'm saying these are the ones which are going to have the best trends. I'll tell you long or short in a second and what we do. I'm just saying they're going to have the best trends, right? So in these four, this is why, even though in trading you and I have got to make just two decisions, when to buy and sell, 75% of people lose money. Okay, that's why 75% lose money, because what you're going to do, what I'm going to do, be different in each of these scenarios. In this scenario, you're going to take a small profit. I'm going to add to my profitable winning position, as do all the success hedge funds managers in the world. In this scenario, okay, you are going to take the profit maybe here and think, oh, you know what I should always do? Always take the profit, because look, it fell. I am going to hold on in anticipation it was going to move higher, and I'm going to end up with less money than you. But because of all my other things that I'm doing right, I'll actually make more than you over the longer term. In this scenario, when it falls a little bit, you're probably going to hold on, right? Or you're going to add to your losing position, and then when it recovers, you're going to think, oh, no, it's smart, Alec. I'm going to exit at a small loss. I'm going to save my money. I'm going to go elsewhere. All right, so what's going to happen to me is I'm going to have my capital to deploy for one of these trades. These are the ones that I'm always looking for. You're getting and wasting too much time on these other ones. And in this scenario, the down scenario, let me just remove some of the screens. Okay, the down, I'm going to get out of that small loss, redeploy my money looking for one of these. You're going to double down and make an even bigger loss. Basically, the difference between you and I is going to be this. You're going to stumble across some of these and get caught in a trap by adding to them. And the reason you're going to focus on these down trades is because you're going to get lucky a couple of times where you've taken a small profit and it then moved down. And so you thought, oh, yeah. Or here where it went down and you held on to it and it came back and you broke even. So what's going to do is these two are going to be traps and get you into this. Whereas what I'm going to do is not fall into the traps of these two seductresses. I'm going to spare my capital and get into these where I double down into these bigger trades. Now, that sounds like a lot of information, a lot of complication. It's source-based. That's the essence of what is happening. I'm going to break that down into the entries in a second. What I'm going to tell you right now is this. These instruments and timeframes are going to be my best. Now, somebody said to me, oh, what does that mean for 2020? You're going to go long or short? No. What we do will depend on the trends that we find. For instance, with the FTSE, I can't tell you in 2020, Alpesh, you're going to be long the FTSE or short. What, for 12 months? No, I want to make the profits through this. Look at this. Who asked it? Was it Michael? Michael, look, this is the FTSE, right? That was a short position. That's a long and that's a short. And that's in the space of just 1 month, from the 2nd of December to the 30th. That was just in December, all right? It was short, long, short. Why? Because that's profit. Whereas if I didn't do that, I would have broken even, because look, it's at pretty much the same level it was at the start of the month. Right? So I'm not saying, oh, I'll just be long the FTSE for the next 12 months because I won't make enough. I'll explain that in the next slide, actually, in a second, what I'm exactly saying there. And I'll show you some more of the trades as well. So favorite instruments are going to be these. Now, Sadi rightly said, what about sterling US dollar? Sterling US dollar is not one of my favorite lists. It never has been. And the reason is it's one of the hardest ones to trade. Just because it's popular means that you've got so much money going in one direction, so much going in the other. It becomes more volatile. It's actually one of the hardest ones to make profits from. I don't particularly like it. I don't care where I make my profits. I often have so many Indians from India following me on these webinars, and they say to me, can this work on Indian stocks? And I say, you know what? It doesn't matter where you're making your money. When you go to Starbucks, they don't care whether you made it in sterling or whatever else. Okay? This is typical of what I like. The suggested time frame, I'll explain why in a second, is the 1 hour. The best times of the day in the UK, in my experience, I'm not going to go into, look, it took me 3 hours to explain why I've come up with these numbers. But for now, the reason I'm telling you is based on expertise and experience is these. Time frames 1 hour, number of trades in a month, 20, winning trades 14, net pips 294. That means you'd make, if you only put £1 a point, you would make £294. If you put £10 a point, you'd make 2,940. It's a multiple of that. Right, take a picture if you want. I will let you have these slides as well, so don't worry. If you stay to the end, I'll let you have them. If you don't, I won't. Continuous means, Michael, I should explain. The markets are open 24 hours a day, 6 days a week. So continuous means all hours. Where some people are in Canada, the markets are open 24 hours a day. It's the same 24 hours whether they're in London or in Canada, because they're open 24 hours a day, 6 days a week. It means continuous, okay, in those hours. Time frames. Now, this is a bit complicated to some people. It's essentially me explaining why the 30-minute and 1 hour time frame is the best, even if you've got a day job. Some people say, why can't I trade the 1 hour time frame? And I say to them, well, yeah, great. You'll have a high number of trades. Like you might have 60 trades in a month. But you know what? The profit potential for each trade is low because it's 1 minute bars. They're going to reverse constantly because it's very short time frames. Therefore, each individual profit will be low, even though you've got lots of trades you're doing. Therefore, the cost per trade relative to the profit, because remember, each trade costs money and you're doing a lot of them, will be high. And you don't want cost per profit to be high, cost per trade over profit to be high. You want it to be low, but you don't want it to be too low because you're trading so infrequently. That's why the 30-minute and 1 hour bars are the best, because you'll do about 9 trades per month if you're looking at any one instrument, or 15 trades per month. And how many instruments should you look at? I would say about 12 to 24. So you get Fred said 1 hour is the best. I agree, Fred. 30-minute number of trades is moderate, because if you do too many, you'll get too high a cost. That's the constriction, okay? That's the constraint. And the profit potential for these is still high. Whilst the profit potential for the 4 hour bars is very high, because you're, in each bar, it could go up and up and up for a longer period of time, because you've got 4 hours you're looking at. The trades per month are so few that the cost per trade, whilst it's very low, the problem you've got here is that the trades per month are too low. So that's why I don't necessarily say 4 hour, okay? Okay, so that's that. Now, top UK stocks for 2020. This is for 12-month holdings, buy holdings. So this is completely different to what I've been talking about. The reason I show this to people, and to take a photo of the screen if you wish, okay, and I'll let you have this on a slide. This is based on our algorithms as well, based on our valuation, growth, and income algorithms, which look at the fundamental data of the companies involved for a 12-month buy period. These are the names we like over a 12-month period. I know some people will say, oh, but Alpesh, there's so many housing stocks. It is what it is. It's based upon the valuation of the companies, the growth, the earnings potential. The why, you might say, oh, no, too many houses, blah, 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 blah. Okay, this is that. And if you want to know how good this is, I'll show you in a second. We've outperformed every single UK company fund manager since 2004, independently verified by a Financial Times award-winning company, and I'll give you their links in a second, all right? Now, I'm also going to give you all the year ahead 2020 UBS view and the Goldman Sachs best, their best and brightest ideas. That's what they call it. There's my WhatsApp number if any of you ever get confused. On that website is all the details of these two things. Take a photo if you need to. I told you earlier, make sure you keep a photo. If you want to know how we performed on the 12-month holdings, this is not trading, this is the 12-month holdings using our algorithms, right? 10,000. This is when it was independently verified over this period from 2004 till 2016. All right, so that's a pretty long time, 12 years. It was independently verified by this company, which is has won awards from the Financial Times, including as recently as 2019 Investment and Wealth Management Award, sharesco.co.uk. Look at Alpesh, where they've independently verified me 10,000 to £250,000. 10,000 to £250,000. They verified my picks over that period. It's on their website, not mine, it's on theirs. Go have a look. They've won awards for what they do. All right. So if you want to know, oh, but Alpesh, are you any good? This trounces Warren Buffett and everyone else. This is why we have a hedge fund. All right. So all these other people you mentioned, you said Charlie Burton. Well, if you're so effing good, tell him to go and get an asset management company, because they'd be throwing money at him. All right. So, not pissing around with, he did a competition where he was the only entrant. Yeah, great. All right. So that's what I'm talking about. I don't like when people think they're as good when they're not. It's a competitive business, trading, and we've got sharp shoulders and sharp elbows. All right. So anyway, those are the figures. Top US for 12-month holdings, buy. These are our highest rating algorithms. Full disclosure, I already own AES. And full disclosure, I may well buy any of these after I've disclosed it to you guys now on the webinar. All right? Just so you know. By the way, you buying AT&T is not going to move the price up. This is not my attempt to get you to buy something which is going to push the price up. All right? I already own AES. These are, according to, we trade everything on algorithms. These algorithms are looking at certain different criteria. Let's go back to trading strategies. Okay, so this was long-term investing. This is investing. I suggest 10% of your money goes into investing, 90% into trading, or some such measure. That's my measure. You might want to do 50-50 or whatever. Let's go back to trading now. And I will share all that data with you. I know I'm covering so much information, right? What we're trying to do with trading is we want a strategy that works, okay? In other words, by works doesn't mean we're right all the time. It doesn't mean we pick the tops and the bottoms. Works means we're profitable. We want it to be simple. So we want to get whatever strategy we've got, we want to be able to put it into just something as simple as stick it in an arrow, all right? Because we don't want to be drawing lines and this and that and the other. So you don't want to be in front of the screen all the time. As I've already said, we want a stop-loss strategy which prevents any of the big losses, okay? We don't want something which causes big losses. Now, people might say, Alpesh, why am I? No, Michael, all that was for 12-month holding. So they were offering, I've answered it. Sorry, mate. Sorry, I just saw your question. All right. And we want something where the big moves are captured and the losses are kept small. That's the essence of a strategy, right? That's what our strategy I'm going to show you now has, and what your strategy should have. If your strategy doesn't, ditch it, use mine instead. If yours does, great, continue doing it. Right. Number 5, you can trade it easily. This happens to be a particular platform. I don't know which one I took the screen grab of, but my point is all you need on any brokerage that you use, and we can talk about brokerages in the Q&A, should be as simple as this. It shows you a buy price, a sell price, and tells you to click buy, sell, allows you to put a stop loss as well. I'm going to explain why we're not going to use limit orders. Schneider, I'll read that at the end because it's quite a lot for me to read while I'm speaking, but I will come back to you on that. So don't worry, my friend. Don't worry. And by using an indicator, using a process, we're removing the problem of psychology. The problem of psychology and emotion is indecision. Indecision happens when you have to rely upon your own judgment constantly over and over and over again. By using a process, we remove that. It's having a discipline. It's like having a goal, a business plan. That's why we're using it to remove the problems of all of that. So let me ask you a question. If your goal for 2020 was to make an additional £10,000 or a multiple thereof, what would we do? Well, to make £10,000, what do you need to do? All right, that's one key question. Imagine you do one trade, only one trade all year long, right? Let's keep it simple. Imagine you make £120 on that trade, right? Let's just keep the math simple for a moment. To make that £120, let's say you risked losing £80 because you put a stop loss and you said, if this stop loss is hit, I will lose £80, right? Because that's how much money you put into the trade, all right? So just make this assumption. If you have £1,000 of capital, that's 8% on a trade. That's way too much risk. But wait, bear with me. If you have £5,000, it's 1.6% capital. Now, imagine you win 60% of your trades, just a bit better than a coin, right? Now, if you do one trade a day instead of a year, you do one trade a day or 5 a week, that's 250 in a year. 250 times 60% winning trades times £120 profit is £18,000 profit. 250 times 40 losing trades, 250 days, 40% losing, £80, 8,000, that's your £10,000. So we need to know a strategy which will break this down and give us this. All right, modest, because what we're going to do is not try and win all the time. And if we've got more capital, we're taking less risk. That's why I'd rather you had more capital. Now, what happens with most people is when they got more capital, they bet larger sizes. And I've shown you if you have 3 consecutive losing trades, what the pain point becomes. And the way we're going to do it is this. All right. If you want to make that 10,000, the suggested daily routine you have is 15 minutes a day. I want you to scan some instruments. I've given you the names already of which ones. Your strategy or hours, put the stops, the entry, the risk, and do one trade a day. So you're going to scan them on a screen like this, right? And I'll show you how to get it. This is all the data on our screen. It's called MT4. It's free from many brokers. So it's broker independent. It's free. I don't own it. Okay. The strategy is mine, but all this data is live, real time. So we're going to pick, and I've shown you which ones I said which are going to be the most trending. Okay. All right. And it does alert people, Sadi. It does alert people on their cell phones if they wish, on a good system. I can discuss that with you later, right? You're going to scan this for 15 minutes a day and find that one trade. There's your process. But we still need to know a certain few more tweaks. And these tweaks are these. If your goal is to make that 10,000, my preference is you have lots of capital, obviously. All right. The least leverage, boring Alpesh. I know. Go slowly. Use a demo account initially. Trade the smallest amounts. How small can you trade? Now you might say, Alpesh, no, I don't want to do that. That's up to you. Risk you take is up to you, but I'm just telling you there's pros and cons to taking risk. Look at this. This is a particular broker where the volume in lots, by the way, all brokers will explain things in lots. I hate lots. But they'll also tell you the pip value, i.e. the points per point it's moving up and down, the amount of money you're risking or losing when it's moving up and down. All right, as you can see there. And what that does, I'm going to move across a bit more because for some reason, I don't know, is the camera moving or something? Is it me? Anyway, let me move across a bit more. What's happening here? What's happening instead here is this. You can trade as there's 39 pence, actually 7 pence for some. And you can say, click a box and say, I will close it at a loss of 50 points. So we need to know where to put that loss. And that's a £20 risk. Actually, you can do even less than that with some brokers. My point is trading can become that simple, that cheap. And that's what I want. I want this pip value to be as low as possible. I want the stop loss, therefore, to be as cheap as possible. So what are those numbers, Alpesh? How do we know when to enter, when to exit? So let me break that down for you. all right? And I want you to trust me on this because there's a lot of fake news out there, not just because of all the bits that I've said already. That I'm pretty well known in the fintech world. That's me because of the awards I've won for not just my software and my trading, for the hedge fund. That's me with my team outside 10 Downing Street, okay? I'm on the advisory board for Downing Street and Entrepreneurship FinTech. That's me launching the FinTech Festival for the Chancellor, blah, blah, blah. It's me with the Governor of the Bank of England. It's me with the Royals, showing them. So listen, credentials, I've got them up the kazoo, both for trading and as a result of trading, the awards I've won, and you can see it there. That's articles about me in the papers, the Rainmaker. That's my Financial Times column, and so on and so forth. Okay, and some of the charitable work I've been able to do. The reason I'm telling you that is not to brag. I don't need another pat on my head. I'm not a child. It's to say there is so much fake crap out there. This is who I want you to rely on, not me. This guy. Would you trust the strategy used for 20 years from one of the world's leading traders? So Bill Lipschutz was the global head of foreign exchange trading at Salomon Brothers. Bill Lipschutz was the global head of foreign exchange trading at Salomon Brothers. Okay. Okay. Clark, I'll answer that question. Thank you very much. Well, it's the universe, isn't it, Clark? It's the universe, my friend. Bill was global head of foreign exchange trading at Salomon Brothers, which meant he was the biggest forex trader in the world, which meant he was the biggest trader in the world because Salomon Brothers was the biggest bank. His chairman was Warren Buffett. That's when I met him for my book, The Mind of a Trader, Lessons in Trading Strategy from the World's Leading Traders. I'm not plugging my book. I get £1 in royalties on a £25 book, which is 20 years old. So don't buy the book. I'm going to give you 3 chapters of the book as well. Actually, speaking of giving you stuff, let me just upload some files right now. I think I can do it. I'm going to give you that Goldman's report right now, actually, because you've all been nice and you've hung on. And the more you hang on, the more freebies you're going to get in this webinar as well. All right. So the Goldman's, I'm going to give you that one. Solutions. Jeez, come on. Solutions. All right, for your trading problems. I'm going to send you the Goldman's one as well in a second. All right. If I can find the damn thing. No, I can't. I'll do that in a second. Don't worry. I'm going to give you the files. Not the easiest system, this one, to send people to, sadly. But yeah, I want to make sure people... Oh, here it is. Okay, here it is. It is about to come to you in a second. Oops, share. There we go, sharing. You should be able to get the Goldman's report that I promised you earlier, and I'll send you more reports in a second as you stay on with this webinar. So Bill was in my book. He was one of the world's leading traders. He was chapter 1. He became a mentor. David Kite, Bernard Opity, legends. They all mentored me 20 odd years ago, and that's what helped me set up the hedge fund. So we're going to trust him. And this was one of now 10 strategies in the hedge fund. I'm going to share it with you. Now, why am I sharing it? Isn't this the secret sauce? No. It's not a secret sauce because he gave it to me and I've shared it before in my Financial Times columns, okay? Let me ask you a question. And by the way, when I'm on the BBC and they ask me about market turmoil, I just use the algorithm I'm talking about now and I tell them what I'm saying, and that's 300 million people watching this worldwide, okay? So it's not something that I've ever kept secret. It's something that I've shared with people on what I'm doing and the strategy and the process, and we just put it into there, right? So the strategy does now use some artificial intelligence and algorithms. So I'm going to give you the strategy now so you're not a screen slave. It tells you where to put the stop losses because you're going to need to know that. You're going to need to know where to put stop losses, as you can see here, where to put stop losses, where to add to our winning trades. Remember, we want to add to our winning trades, indications of how the market's going. It's just an indicator. It's not telling, and then telling us when to, where that stop loss is, where the sell point is, how much risk we're taking, all of that. That's what we're going to do manually. And then if you want to automate it, I'll show you how to download to automate it, but I'm going to show you manually. Those are the essence. Okay. And then I'm going to give you hand holding through me because that's my promise to you. All right. And if you're not sure throughout any of this, make a note of this link. All right. You can call me if you don't get confident from what I'm telling you. This bit you don't understand it, allow you to schedule a phone call with me. Right. Anyway, the problem, I'm not actually going to go through these problems because I've actually answered these 3 problems. I'm going to go through the business plan and then give you the strategy. The business plan is this. This is, by the way, that's my mum, always makes an honorable visit on my webinars. That's me at a charity function with Prince Charles. I don't know why he's buying down at me. The Road to Rich was a title, not by me. It was used by one of the investors in my hedge fund. And he used that wording because when I met it, he said, well, you know, you're meeting these hedge fund legends because you want to be rich. And I said, yeah, what's wrong with that? You know, give it all away for charity afterwards. But yeah, I do. What's wrong with that? There's nothing wrong with that, is there? Surely not. So that was how that word came out. I'm going to send you another file called Scoring. Okay, Scoring Trading Tutors. I want you to know that, because some of you asked me about other trading tutors, and I tell you what, none of them on this scoring guideline meet the criteria they're supposed to. They just don't. And I've said to the FCA before, these other tutors should be absolutely shut down. So let's do the business plan first, and then how we know where to enter, where to put that stop loss, so you can copy all of that if you don't have your own strategy. Because I've already discussed how on a screen we're going to monitor stuff like this, or in the case of euro dollar. By the way, if you want to know for tomorrow, euro dollar, we're long currently on euro dollar. Okay, so if you want to know the trade beforehand, that one didn't work out. That's fine. We were flat on that, but look at how much we've made on this one. And where that red dotted line is, we added to that winning point there. I'll show you how we do it. And we doubled down again. So we could start small just in case we had a loss. How do we come to that stop loss? I'll explain that in a second. It's always based on the volatility of the market. So it's bespoke to each market condition. Our entry signals, I'll explain to you the manual rules so you can copy them if you wish. Okay. And we'll come to some more positions that we've got open at the moment. I'll tell you the FTSE position we're on, the Google one, and Metro Bank, okay, as well. So let's do the business plan. I need you for about another 20 minutes, and I'll show you how to download all of that as well, and the other slides and everything else. Set your risk capital. My mentor said to me, Bill Lipschutz, Global Head of Foreign Exchange at Salmon, said to me, trading is like driving. Right, you've got a wing mirror, you've got reverse view mirrors, you've got a steering wheel, you've got a clutch, an accelerator, a brake, you've got a gear shift. It looks complicated. It looks like it's going to be too much for you to do, and yet you managed to do it. Right? And trading's like that. Don't be overwhelmed with everything I've shown you. It's like your first ever driving lessons. As we progress, it'll get easier, it'll make more sense, and like driving, it'll become simpler. So let's do that business plan really quickly again. For yourself, get that pen and paper, and then we'll do the entry rules and the exit rules. Right? Maximum loss, he said to me first, just put it as 1% of total capital. He then said, pick an amount of capital. Remember, I was at university at the time. He said, pick an amount of capital that you aspire to have. Now, when I was at university, I said, well, 20,000 would be amazing. All right. Now, you know what you're all thinking, what's wrong with you? But remember, I was at university, I had no money. I wasn't filthy rich or anything. So that's what I said. I said, oh, well, let's just start off with that. Start off with a moderate amount, right? And he said, okay, that's fine. Now, maximum loss per trade would therefore be 1% of 20,000, which would be 200 pounds. I said, that's fine. Okay. And I said, okay, that all makes sense as well. Right. Now, let's look at this. Win-loss ratio. Quite a few questions coming out. I'll answer those. Shoki, Sadi, Sharon, Earthg. Okay, welcome. I'll answer all of those in a second. Win-loss ratio 60 to 40. So you're winning 60 out of 100 trades. You're losing 40. All right. Average loss would therefore be that 1% of 20,000, be 200 pounds. Average win would be 300. Why? Because we're adding to our winners. Remember, in our process and our system, and that's the secret clue. Winners add to winners. Write that down. Winners add to winners. So we're going to have a strategy where we make more money when we win than we lose. Any person who ever says to you, oh, what's your win-loss ratio? In other words, where do you cap your profits? Why do you cap your profits? If you strike oil, you don't cap your profits. You double down, dig the hole deeper, right, to make more oil, right? And that's what we did. We start small, and then when we got some profits, we risk those profits to make more. We double down on our position. Where do we do it? I'll show you exactly the precise points at which we place it. Well, I'll show you now, actually. So see that? That's the buy. The green arrow was the buy. That red dotted line is where we're going to double down on our position if the price gets there. Now, the beauty with this, you don't have to watch the screen because you know where the entry is. As soon as you got an entry, either it's loaded on a phone or you've been scanning the screen for 15 minutes a day before and after work. You see that and you say, right, I know where to broker, buy now with its stop loss. It's written there, and I'll tell you how we work out a stop loss. Then I want you to buy some more there with its own stop loss as well. It's as simple as that. And that way we can start small in case it goes into a loss, but also if it goes into a profit, we're risking profits. Yes, Earthg, that's correct. If it goes into a profit, we're risking those profits to make even more. Now, average win, £300. Therefore, just assume it for the second. 100 trades, 60 times £300 means £18,000 in profits. So I was at university, and I said, when I looked at this with Bill Lipschutz, we're doing this business plan, I said, Bill, tell my parents I want to leave university. This is all I want to do for the rest of my life. This is too good. This is too amazing. Okay, this is too good. This is too great. 40 of those trades were losing. £200 in losses, £8,000 in losses. Well, that's net profits of £10,000 per 100 trades. That was more money than I could ever have imagined. Obviously, we hadn't started trading. It was just on paper. And I said to him already, I said, Bill, called my parents, I want to leave university. I want to sit in my underpants in front of the computer all day long, banging away at the keyboard, and magically money will appear in my bank account. I know that's why the reason you're all here as well. You all want that as well. £10,000 per 100 trades. I said, that is amazing. And I said, I'm going to become a day trader. Okay. Day trader. I'm going to, thank you very much, Sadi, my friend. I'm going to become a day trader. 100 trades per week, 50 weeks a year. That's 5,000 trades per annum, which at £10,000 per 100 trades means £500,000 a year. That was the maths I started doing. I was on the calculator, as we all do. You go a bit crazy. Don't be silly. I know what you're all thinking, and you should be thinking this. Alpesh, don't be stupid. We're not going to do 90% of that. Alpesh, what are you smoking? We're not going to do 3/4, 2/3, a half, or even a third, a fifth, or a quarter of that. We're not even going to do 15%. Let's say we did 10% of this. This business plan was over optimistic and we only did 10%. Well, that'd be £50,000. Hang on, 10% is over optimistic. I said our goal is going to be about 500 to 1,000 per month. Now you might say, why such a modest goal? Well, the more modest the goal, the more likely you can baby step hit it, and then you can worry about, if you've got the skills to make 1,000, you can make 2, you can make 2, you can make 4. So let's say we don't hit our business plan. We don't even get 10%. But hang on, who's going to be a day trader? Calm down. Who's going to do 100 trades a week? No. Bill Lipschitz said to me, forget it, Alpesh. Instead, be a day jobber. Keep your day job. All right? It's partly because he didn't want me to leave university. He said, keep your day job. Do 100 trades every 6 months, he told me. You know what 100 trades every 6 months is? Merely one a day. Now, you can do more if you wish, but you'll take more time. Okay? There's time is money. But let's say you start off with just the modest 100 trades per 6 months. I don't want you to be greedy. Just want you to do 100 trades per 6 months, 1 a day or 5 a week. You might do them all on Fridays, all on Mondays or Tuesday, whatever. Okay? That's 200 trades per annum. All right? That's 200 trades per annum. That's 20,000 trades per annum. Sorry, £20,000 per annum based on £10,000 per trade. So that's not 50K. It's about 4% of our business plan. But hang on, 4% of our business plan is still way more. It's almost double the 1K per month. So 1K per month that we're after represents about 1.6% of our business plan. That's what we've got to hit. We've got to hit 1.6% of our business plan. So is trading an activity you want to do in 2020? I hope so. Hell yes. Is it something you should be excited about? Yes. But the question you should be asking now is the same question I asked Bill Lipschitz when we went through this, which is, well, if these numbers are right, how come everybody isn't rich? If this is true, how come everybody isn't rich? And the key reasons for failure, Tommy, was bad teachers, bad mentors, and bad strategies. Bad strategies. Okay, so let's discuss in the final part of this webinar, strategies, right? Let's do the reminder, 100 trades for 6 months, 200 trades per annum, £20,000 per annum. No, it's not £20,000. I told you. It's merely, there's my mum again. It's merely 1K. It's merely 1K per month. All right. So it's not actually 20. It's not even that. It's more modest than that. You might say, I want to be modest. Well, I showed you earlier. If you want to spend more time, that's fine. You can earn more. Right. So like I said, what are the reasons people fail? Bad teachers, bad mentors, bad strategy. Let's talk strategy. My strategy, and you can copy, it's the one Bill Lipschitz mentored me and taught me. It captures everything that I've told you in this webinar, which is where do we put the stop loss? How do we know when to enter? Where do we put the stop? When do we know when to add to a winning position? And how do we know when to exit if we're not at the computer screen? Because we're doing trend following, we're this guy, the guy in red. Trend following or momentum trading, we are this guy, okay? In red. We are riding the coattails of this guy in black, right, who is Goldman Sachs or whoever. Right, we're just riding his coattails. So what we're doing is we're riding his coattails, which means when he moves the markets, as he did down here, we just rode those coattails and boom, 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 and we added to our winning positions, and we made a nice little killing off the back of that. All right, that's our strategy. So how do we do it? So Bill said to me at the time, remember I was a poor student. I couldn't afford, I certainly couldn't afford daily, monthly, weekly subscriptions. I'm not going to ask you to pay for those either, for data or for software. Forget about it, okay? Or to brokerages, right? So he said, well, what we're going to do is we're going to take the best practice of hedge funds and we're going to simplify it, strip out the complexities you can't manage to do, Alpesh, but it'll still make you enough. And I said, yeah, okay. As per the business plan, still make you enough. So he said, what we're going to do to measure momentum and find when trends are about to start is we're going to measure how close to the high the price closes in any given period. And I said, why? He said, it's a bit like those TV auctions. You know, when somebody goes, I've got 50, anybody give me 60, I've got 60, anybody give me 70, I've got 70, anybody give me 80. the more buying pressure there is, the higher the price will close to the high. Okay, it'll close up here. And when it closes closer to the high, there's an increased probability, not a certainty, there's no certainties, that in the next period, the price will move higher as well. There's an increased probability. So I said to him, well, that's all very well, but how the hell do I measure that? I said, how the hell do I measure that? All right, how am I going to measure that? You know, that's really difficult. Now, look, 26% of you do hardly any trades. You're just learning, and that's great, because the point with trading is, for you compared to the one who are doing 1 to 5 a week or over 5 a week, is the ones doing hardly any a week can observe the markets and learn. It's like learning to drive in a car park at a supermarket when you're first learning to drive. The others who are doing more than 5, you add this into your process and mix and compare it to what you're doing to make more money. All right. So I said to him, well, how am I going to find these? And he said, well, look, all hedge funds, we're going to copy what they do. They do 3 things, right? Write this down. They all do 3 things. And we're going to do our version of those 3 things, our private investor, poor student version. All right. Our private investor, poor student version. Hey, that's what we're going to do. And I said, all right, I understand. That's what we're going to do. I get it. And they are these things. He said, the first thing is, there's many ways of measuring whether the price is closing near the high. There's multiple so-called indicators, free indicators. None of them work all the time. None of them work all the time. So he said, what we'll do is we'll filter. We'll make sure we don't just look at one. We look to see when multiple indicators are giving us a buy indication that the price is closing near the high. And I said, yeah, but okay, so we'll look at multiple indicators to filter. But he said, we'll use them in a way the textbooks don't, because some of these indicators are too late, some are too early. So we'll use them in a way the textbooks don't. I said, fine, explain that to me. And he did. And I'll explain that to you in a second. He said, also what we'll do is we won't just look at the time frame we're trading. So if we're looking at the 15-minute time frame or the 4-hour or the 1 hour, we'll look at the slightly longer term time frame as well to see, are these multiple indicators also showing the trend in that direction? And the reason is then we got a higher probability of a bigger move. Write that down. Higher probability of a bigger move. That's what we're after. It's the higher probability of bigger moves. Write this down as well. 80% of your profits in a year will come from 20% of your trades. 20% of your trades will be the big winning ones that you added to, and it just kept rising. Now you might say, why aren't all my trades big and winning? Because we don't have a crystal ball, right? Nobody does. George Soros doesn't. Bill Lipschitz doesn't. Nobody does. That's why we add to our winners. And 80% of your profits will come from 20% of your trades. It's those 20% which will be the big winning trades. They're the ones which, when we have the multiple indicators that we look at, which I'll tell you which in a second, and we look at the next time frame along, there's a higher probability of a bigger move. And then the third thing he said we've absolutely got to do, and this is critical, is PC and PR, and I'll explain what that is as well, okay? So what are these rules? Let's go through it. The multiple indicators we looked at, but not the way the textbooks do, were the ones which were freely available, because I couldn't afford any subscriptions. So we started off looking at all the ones which measured as the price closed near the high, like the MACD, RSI, and momentum, and none of them work all the time, okay? They're pretty shit, actually. But when you filter them through and add rule number 2 and 3, there's enough of a slight edge, and that's all we're after, enough of a slight edge. So what we did, he said, is don't use them the way textbooks do. Look to see, are these multiple indicators, all multiple indicators, flat to rising, flat to rising. So that was a key differentiator there. We were using multiple indicators, flat to rising. He said, then look at them across multiple time frames. Look at the next time frame along, and are they also all of these multiple indicators flat to rising? So we picked the MACD, RSI, and stochastic, right? And he said, then the third thing you've got to do is PC and PR. Well, PC was price confirmation. What's price confirmation? It's this bit. Has the price made a 2-period high? Why? Because you want to see not just what you've seen or other hedge funds might have seen, and they have different indicators looking for the same thing, the start of a trend. Have somebody moved the price? Because if they don't, you're just the cleverest person in the room and twiddling your thumbs. You want to see, has somebody else move the price? That's what we needed. We needed the others to have also moved the price, okay? And what then happened is that increased the probability of a rise. But I said there was something else, not just price confirmation. The most important thing also was PR. What's PR? Pattern recognition. Once artificial intelligence came out, what we started doing is not just using these manual rules, okay? What we started doing, and let's do it with a FTSE. Let's do it with the FTSE. What we started doing, and we realized this was critical, And if you don't do this, you won't get as good results, but it's okay, right? We started looking at 20 bar historic patterns before the moves. And we use Microsoft Azure's artificial intelligence agent to build up these libraries and look for pattern recognition for increased odds. We're just looking for a slight edge that we're better than 50-50, better than a coin, and supplementing it. So we'd get results like this. This is our results from FTSE for December. Okay, typical month for us. Boom, boom, boom. Tomorrow, we're going to be short the FTSE as we go into it. Now, you might say, oh, but don't be stupid. It's going to rise. It's going to rise. You may well be right. And we might get stopped at a profit on this. And we might exit. And that's fine. We might exit. I'm just saying that's what we follow. I'm relaxed. We follow it. All right. So what? I give some profits back. I don't want to second guess all the time. Because I second guess one's going to second guess all the time. But that was the pattern recognition AI part. Right, so this is what happened, and that's what it looked like. That's what allowed me to go from devising this when I was at university, Red Carnation, last exam, perfecting the strategy, winning competitions in the Financial Times. Okay, again, somebody earlier mentioned some trader and said, oh, he won a competition with some private investors. No, I beat fund managers. This is the front cover of the Financial Times business section. Patel is top FTSE 100 forecaster. All right. So the FT said, do you want to write some books on this? You're really good. I said, hell yeah, because I want a profile so I can raise my hedge fund from sovereign wealth funds and from pension funds. Hedge funds can't take money from private investors, so none of you can invest in hedge funds. It's just the law, right? There. That's the league table in the Financial Times. Alpesh Patel first. You know who came 14th? Neil Woodford. Smashed him out of the park, and now we can see it's rubbish anyway. It was rubbish back then. I should have the $10 billion people gave him, but you know what? They trusted him with the money, and now they suffer. They didn't trust me with it. They only gave me, we raised from Aegon, AXA, family offices, we raised 90 million euros. You might think that's rubbish over 10 years. You're right. It should be $1 billion. My mum thinks it should be $1 trillion. My mum thinks I should be the only fund manager in the world, but mums are nice like that. All right. So we use this strategy and these algorithms for that. Won competitions in the FT. You talk about winning competitions. Somebody earlier mentioned competitions. Sunshine, Financial Times is harder than anybody. Okay. Flat to rising just means this, that the indicator itself was going like this, the MACD or the RSI stochastic or whatever else. Okay. Sadi, give me a second. Then that was licensed by Merrill Lynch HSBC. You can see me there. There. Talk about winning a competition. So good. These banks use you. The banks paid $1 million in total over a 12-month period to license the software. That was the deal that allowed me then to set up my hedge fund. So that's me at my very first set of offices. You can see I have my hair. I'll show you how to download it as well if you wish. I've given you the manual rules. I'll show you how to download it, and I'll run through brokers and do the Q&A. That gave me the TV profile. You don't get on TV unless and get asked your opinion over and over and over again, okay? Unless you're bloody good over a 20-year TV career. But people kept asking, will you personally mentor on coaches? And I said, there's not enough time in the day. Sorry, couldn't do it. Can we copy your trades? And they'd give me requests. And I said, look, there isn't, I haven't got time. Training workshop seminars. I said, no way, I don't have time. I'm traveling a lot, meeting our investors. That's what CEO of an asset management company does. They go meet pension funds and investors. But what all the time pissed me off was all these people with their trading rooms and academies and schools and institutes who wanted to charge people $2,000, $3,000, $4,000, $5,000. Let me know if you've paid ever for those kind of stupid fees, right? Let me know if you've paid those stupid kind of fees. And I realized, I said to them, what do you really want? And they'd be complaining to me now for 20 years, and since I was writing the FT column as well. Or they'd say to me, these people, they shove you in a classroom, you got hotel costs, you got travel costs. They said, we want something which is self-paced. We can look at it on demand at 3 a.m. We can look over your shoulder, see what you're trading. We can have one-to-one attention from you for life. We don't want to pay anything every day, every week, every month. Want something which is convenient, can do on our phone or from home, compatible with our work, because the markets are open 24 hours a day, 6 days a week. Ongoing support for life. But you, a hedge fund manager, mentoring us using modern technology, and not just little videos and mentoring and manuals that you use in your fund, but we can come and meet you as well. And don't charge us something every day, every week, every month, okay? And I said, okay, so 30% of you have said that you've used a trading mentor. Let me know the names of the people you've used, and I'll tell you whether or not they're regulated money managers. Because if they're not, and people don't trust them with their money, why are you trusting them? Why are you trusting them? That's the question. So let me know of which ones of you have done that. I'll show you how to download it. Don't worry, there's those of you screaming at me that you want to download the indicator as well, okay? I'll show you how to do it. All right? So people doing this, you can do it manually. I told you, multiple indicators. Flat to rising, multiple time frames, pattern recognition, price confirmation, Okay, but the problem we found when we gave this to people doing it manually was this: they just became fat and lazy, and they just thought, oh, it's too complicated. It just became too time consuming for them to do it manually. Also, on top of that, of course, I'll show you how to download it. Don't worry. What we also found was this other problem, was this, that people needed to, let me draw on the screen. Let me draw on the screen. It's really important. I only need for 5 more minutes. I'll give you the download link in a second. People needed, when they had the entry, which is this green line here, okay, the entry, they needed this stop loss. And that's a volatility-based stop loss. What we do is, the more volatile the market, the further away the stop loss, because we don't want to be stopped out by noise. And the further away the stop loss, then what happened is, you do a smaller trade size. So you're never risking more money just because the markets are more volatile. The beauty of that, more volatile the market, you're not risking more. So it's called volatility-based stop loss and volatility-based position sizing. That was ingenious. We stole that from other hedge funds because they were doing it. And that protected our downside from never getting stopped out from market noise. And the parallel of that is where we add to our winners. Now, I've got some questions. Somebody said Jay Lakhani, don't know who the hell he is. Bindle FX. No, Jay Lakhani is not a regulated fund manager. I'd know Mr. Winters, please, come on. How much did you pay, Derek, my friend? 10,000, 15,000 pounds? Not a regulated money manager, because if they were any good, people would be throwing money at them. Astro FX, never heard of them. Never heard of them. Are they FCA regulated? I'd be worried. Richard, don't give any money to people that are not regulated. Okay, so then we decided, you know what? How do we solve people's problems from a technology perspective, such that it's worth our time? Okay, because we weren't going to do it unless it was worth our time. What's the bloody point of us doing it if it's not worth our own time? Okay, so we thought to ourselves, well, what's worth our time in terms of technology? How do we solve the problem? So I've listed all the problems with you and what people had, because people were trading like this, you know, and I thought, well, we live in an age where technology can be worth billions if we can solve people's problems. So this is how we did it. Oh my God, £2,500 for a weekend course in London. A good book was a better purchase. I know, Derek. I know. Don't do it. $2,500. People are paying so much money for stuff. You know, I'll mentor you guys. I'll show you how. Okay, and I won't charge you anything every day, every week, every month. Certainly won't charge you $2,500. You know, it's not fair. Without an indicator, this is what's happening. People were doing this. So we wanted to automate this process. So what we did is I said to my team, we called it Project pipspredator, and I'm going to let you download it in a second. All right, and I'll show you our ambitions for the company and how we're going to make it into $1 billion company. We said to people this. I said to my team, I said, look, we've got this technology. We're using it in the fund. It's one of our 10 algorithms. What if we make it available, but somehow create a business around it that it's worth our while? It's worth putting on the stock exchange, NASDAQ probably, right? Buy when the price goes above the horizontal line before it comes, because it confirms that there's price momentum, odds of the problem mover have increased. Right. And what if we could do this so that not only gave this, but we gave them lifetime mentoring and direct access to me? Is there a way of doing it efficiently, cost effectively? They don't have to pay anything every day, every week, every month. They've got live real-time data. They've got access to a community site. They've got WhatsApp access. They've got Telegram channel access showing trades. They've got weekly newsletters as well. They've got a course material. So they've got the mentoring if they need it. How can we do that? As well. All right, Cliff, I'm going to give it to everybody in just 1 second, my friend. I'm going to give it to everybody in just 1 second, right? And what if it could also measure the trend, tell them when to enter, when to exit, and give them signals on their phone, and it scans all the instruments they want. I'll tell them which ones I recommend, but it scans everything, scans all of this. European stocks, US stocks, everything from IBM to Google to FTSE to currencies, depending on what they want to do. I'll tell them what I like. Simon said trend signal are not produced by fund managers. They're not hedge fund managers. If they were that good, they'd be using it in their hedge fund, and they don't have one. You got to ask yourself, why would somebody charge you $3,000, and a monthly fee when they could be using it in their hedge fund and spinning out the technology and charging you a lot less because they're making money off the back of a fund? Yeah, come on, guys, use your heads. You know, it's almost like people want to be lied to, right? So this is what we did. We put this together and we spun it out of the fund, and we found that the most profitable time frame is the 1 hour time frame, because you could do 25 trades in a month. Some months you did as high as 40. I'll show you how to download mine in a second. Okay, net pips captured in a month was 2,250. And by the way, this is every time I'm on TV, and I'm on once a week, okay, for 20 odd years. This is the indicator I use. This is what I tell them. Okay, this is what I tell them. Somebody says they're charging $4,000. Jeez, seriously, guys, should that money, if they really gave a shit about you, shouldn't they give you that money and keep it in your pocket, and that's your profits right there, instead of charging you, and certainly not charging you every day, every week, every month? That's what tells me they don't care about your profits. And if a company doesn't care about its clients, it's not a good company. Net pips captured in a month, 2,250. Some months you might capture 4,000. Some months you might capture nothing. What happens if you capture nothing? Well, like I said, all trading is the month you capture more, you keep the profits for the month in which you capture less. Month you capture more, you keep it for the month you capture less. The best streak, not guaranteed, best winning streak was 70 winning trades out of 100. The worst was 30 out of 100. But that's not what matters. What matters is the net pips captured, 2,250. The typical maximum loss in pips was 50 pips before our stop loss was hit. Remember our volatility bits stop loss. Stay with me for 5 more minutes and you're going to get the download link, my WhatsApp link, my Telegram channel as well, so you can see the trades. Okay, so you can follow it on there. Now, let's say you did a whopping $2 a point. Don't do it. Don't do $2 a point. It's too much. You'd lose $100. Okay, but let's say you did $2 a point. 2 times $2,250 in a month, net pips captured, would on average be $4,500 potential profit a month. Well, hang on, $4,500 a month, that's 10 times more than what I said. I said we want to do 500 to 1,000 a month. Let's say 500. If we only want to do 500 a month, we don't need to do $2 a point. We can do 20 cents, as I showed you earlier. There are brokers out there, and we'll talk brokers in a second, which will let you do as little as 20 cents, right? So I said to people, what more do you want? And they said, well, we don't want to pay anything every day, every week, every month. No subscription. I said, I agree. That money should be in your pockets. It shouldn't be in my pocket. It should be in your pocket. So we had to create a technology where people said we want the hedge fund manager behind it, FCA regulated, want professionally trained communicator, right? I was paid by Bloomberg for my TV show. I'm a trained barrister. Why did they want a professionally trained communicator? Because when they communicate with them, they don't want to know that it's boring. Okay. Bloomberg, Financial Times used to pay me £1 a word for my Diary of an Internet Trader column, right? Just so you know, I'm a visiting fellow at Oxford University in Business and Industry, all right? So I lecture there once a year on that as well. I did my research on behavioral finance there. I also did my undergraduate there as well. And we continue doing our research and development. And award-winning picks. When I've won awards, somebody said earlier, oh, as soon as they won an award. When I've won awards, it's from organizations you've heard of, like the Financial Times I showed you earlier. When people say they've won awards from fake outfits, they're always fake outfits if you've not heard of it. All right, you know what a fake outfit is? Somebody you pay money to advertise in their magazine, and then they suddenly give you an award. Yeah, no shit, right? I'm talking about Financial Times, credible ones, credible. All right, no, don't do $2 a point. Do 1/10 of that, so you got 500, and the broker will work out what the percentage in terms of lots is. Okay, because they're machine, as I showed you earlier. But I can answer that a bit later as well. So then you've got this: can it make money? Is it easy? Can it make money? Well, I'll show you some more winning trades. Is it easy? Yes, you're just following the signals and you get alerted anyway, and it scans the markets. Can you do it anytime with a day job? Yeah, it's built around a day job, right? And I've told you how many trades you should do. Now you might say, why don't we just do loads and put all our money into it? Because I said, no system works 100% all the time. This is one of my apprentices. Okay, full disclosure, not me. One of my apprentices, euro dollar 5-minute bars. There you go, euro dollar 5-minute bars over 3 hours, 75 pips, including additional positions, 75 times $30 a pip, $2,250. That's what he made. Right now, you're not going to do $30 a pip. Why is he doing such a large amount? I'll show you who he is in a second. The reason is he's consistently profitable. So he goes faster and faster. He goes bigger and bigger. So just like when you learn to drive, you go bigger and bigger and bigger. Okay, I won't go through all of these. These are my apprentices who have done these trades, and they're all good. What my ambition with this technology is get 1,000 profitable traders who've been through the program, all mentored by me. Once I've got 1,000, I've got a valuation for the technology spin-out company, got a valuation which venture capitalists will invest into. They've told us they'll invest $30 million. We've got 1,000 profitable trades. We've got 800 so far who've gone through it. Okay, I take them in batches of 25. I take them in batches of 25 to give them the software, the mentoring, the course material, and everything else that goes with it. I'll show you how we mentor to get them to profitability. Some just take the software, they start trading, and they don't need the mentoring. That's fine. Whatever it takes you to get to profitability is fine by me. Okay, and you don't have to do the classes. You don't have to send me trades. None of that. You just have to say, yeah, okay, I'm profitable now, Alpesh. And you're only going to say that if you actually bloody are, okay, using it, all right? And if you want to know who's behind it, here's one of the biggest names in the world who's behind it. The chairman of the Chicago Board of Trade, when he was chairman, Pat Arbor, he wrote this: gets to the heart of the matter of trading by clearly elucidating the methodologies of successful trading strategies. clearly elucidating the methodology of successful trading strategy. This is a successful trading strategy as verified in print on a Financial Times book, Financial Times jacket cover. He wrote this. Successful trading strategy, the chairman of the Chicago Board of Trade, which is the world's largest exchange. You cannot get a bigger endorsement than that. You know, other people, some of the names you've mentioned this evening, they'll have Mrs. Jones from Croydon, Mr. Smith from Manchester. Those are people who are very easy to pull their wool over their eyes, even if they exist at all, right? The chairman of the Chicago Board of Trade is the endorsee of this, right? I won't go into all of this. What we're trying to do is get you from this to this, this to this. Simple as that. We're trying to cut out the bullshit, get people who are serious. I only want 25 at a time who want to use the software. They don't have to do course materials. They don't have to do, we have a 12-week course. They don't have to do a 12-week course. They don't want, they can just download the manual and the software and start tonight. Okay? Because with an indicator, this is what you're doing. And you can use it. Oh, by the way, for using it, I'm going to give you signed copies of my 2 most recent books to keep, just to keep, right? Just for using it. And you can use it for 30 days. Tell me if it's profitable. It's a 30-day no quibble money back. Well, you can use it for life, but it's a 30-day no quibble money back guarantee, 100% money back guarantee. There's no daily charge, weekly charge, monthly charge, nothing like that. You could just observe it. You don't actually have to place trades. You can use any broker you want. Okay. But hopefully in those 30 days from the course materials, the manual, everything else, you'll learn that shit, we're going to make money. All right. And I'll show you my most successful apprentice. This is Biku Alawali. I left school at 16, Barclays Bank. He was at, I love the pipspredator. Now I spend most of my time trading. I love that as a novice. I know what to trade and when. Okay. He's one of my most successful. This is my definite most successful. Naomi Wastell. She now manages $10 billion for Newton Investment Management. She left university, became my trading assistant for 3 years, then left me to join Newton. She now manages $10 billion. That's as big as that. Okay. Sadi, later this year is the answer to you on that question. This is how I do it. The reason I limit it to 25 users is at a time. So I'm building up to 1,000, 25 at a time, because I'm doing the mentoring personally. Okay, for now. When it becomes a big global company, it's IPO'd on the market, there'll be other teachers. You, in the first 1,000 batch, and I've gone about 800 who've gone through it, will always have me. Will always have me. And I've asked you some questions just now. What are your biggest trading challenges? Stops. Guess what? This tells you the stops. Based on the volatility for every specific instrument, based on its volatility. Entries. It tells you the entries based on multiple indicators, across multiple time frames, pattern recognition using artificial intelligence, and price confirmation, when to take profits. It shows you when, through a red cross, when the entry is running out of momentum, or if you're not going to be at the computer, you place a trailing stop loss. It also tells you when to add to your winners. Okay, tells you how much money you're risking, because it tells you if you risk this much, this is how much you'll lose if the stop loss is hit, which is a percentage of your portfolio. So that's easy enough as well. Okay. Our latest version, which is coming out this month. Oh, by the way, all upgrades are free for life. All upgrades and updates. This is our upgraded version, which is going to be launched this month as well. Actually tells you, look, lot size 3, 72 pips if you want to risk 1% of your total portfolio. It gives you all the numbers down there in terms of risk, tells you where the stop loss levels are, where to add to your winners, and you just tell the broker, you just input those numbers into the broker for the trades you want to do on the instruments you want to do. So you're still in charge of it all. There's no sort of robot which is running your portfolio for you and getting you screwed. You can use any broker. It's broker independent, and that's why we do it that way. 30-day money back guarantee. So we thought, how much is this worth? Okay, we looked at what other people were charging. First, we thought, should we just give it away for free to get to 1,000 people? We thought, well, if we go to free, people aren't going to do it. Okay, because anything which is free, they just don't give a shit. So then we thought, no, and we thought we want to charge less than all these idiots on the internet who are not fund managers and who are just trying to rip you off. Okay, so we want to charge less. We don't want to charge anything every day, every week. We want to give mentoring included in that. We want to give mentoring courses, give everything people want: videos, infograms, ebooks, direct access to me through WhatsApp, through a community site as well. All of that. We want to give that plus the indicator, plus all that, but just a one-off. And so the way we did it is this, and you should be able to see it on your screen now. All right. And we said you got 30 days to try it, not 7, not 14, not 21, but 30 whole days to try it. And our ambition for this is that it takes you from this to, once we've got 1,000 profitable people, we're going to get venture capital investment from Google Ventures and Amazon Ventures at a 30 million valuation. And then in 5 to 6 years, have that IPO'd at $1 billion unicorn. And I want all indicator users, all apprentices. So I'm calling you an apprentice if you're a pipspredator indicator user. I want all of them to have free shares in the company. That's the idea, and that's what the lawyers are going to work out, how to make that happen, okay, as well. And I'm going to show you, we have, when you go to alpeshpatel.com/here, okay, Yes, Michael, it works on, is it Michael? No, sorry, Tony. It works on Mac and Windows, so don't worry. We can install it for you if you're not technology savvy, okay? It takes 10 minutes to install, but we'll do it for you if you want. You just go to that URL, alpeshpatel.com/here. You can see it there. Data is protected. Lifetime mentoring from me as well at no additional charge. I'll explain what mentoring is in a second. We've got online courses if you need them. Explains things to some want to be hedge fund managers as well. 30-day money-back guarantee. You go there. Sorry, it says hurry, and the web designer went nuts. He went, this is great, because he went through it. I said, design something suitable. He went, mate, this is so great. Let's say hurry. You know, the reason it says hurry is the plan is not for you guys tonight, is in future to have £2,000 a year for the mentoring, £2,000 a year for the indicator. The plan is that, but not for you guys tonight. For now, and you'll always have me as your mentor. In future, when we expand out globally, there'll be other mentors, other teachers. But for now, for the first 1,000, because it's my baby, I want to get it to success. I want to get to the 1,000 profitable traders. Got 800 who've gone through it. Once we get to the 1,000, then we get the venture capital investment, as I said, 30 million valuation. When you click on there, you can either use PayPal if you want to be really, some people, I want PayPal. Everything's secure. There you can see big, hairy company, very famous company as our payment processor. So we don't see any of your details. Secure server is there, right? Or you can use, like I said, PayPal. If you're using Amex, you've got to use PayPal. You don't need a PayPal account to use PayPal, funnily enough, or MasterCard, Visa. If you're in the EU, there's VAT chargeable. If you're not in the EU, there isn't. Okay, it's as simple as that. If you use it for 30 days, you make your money, you place your trades, and you say, Alpesh, I want my money back because I made my 1,000. Hopefully, you'll think, oh, no, I want to keep it. And we can start trading straight away this week. January, look, listen, you're never going to be more motivated than now. You've got a whole bunch of Christmas bills to pay and an ambition that's burning to reach your potential in January in 2020. And therefore, that's why I wanted to do the webinar today. I want serious people who are committed to profitability because it helps our company get to the higher valuation that we think it will deserve to be at. Okay. How do I mentor people? We have a website, pipspredator.com. That's not how we mentor. We mentor through webinars. I do the webinars 6 a week on Saturdays for apprentices, okay? And these webinars, 6 a week. Something else coming through now. By the way, put it in the chat box as you sign up so that I give you a shout out. Melinda, you are through. So is Kiran. I can see that. S. Shah is through as well. Selena, I can see yours has gone through. Congratulations. I'm excited for you as well. Louisa, yours has gone through. I'm excited for you as well. Mo, good. There's a lot of people who are very excited. Good. I want to tell me not just that you signed up, but that you're excited as well. Praveen, it has gone through as well. I can see that you are excited. Webinars. Okay, 6 a week on Saturdays, 11 a.m. So you got that way to access me. Daily news emails and on a Telegram channel and the trades we're looking at 3 times a week. We show you those, as well as, of course, you're looking over my shoulder. I'm looking over yours. We're using technology, which you'll see when you go through the course material, that you can send me your trades and your trading journal. We show you how to do one and your business plan so that I can speak to you and do that as well. Okay. Course material, 30-day course, 12-week. I'll show you that in a second. One-to-one meetings with me, live trading, so we can see each other. Trader community website, I'll show you that in a second, and personal feedback and mentoring. And we've got all of this. Nobody else competes to us. Nobody comes close. That's why we think this is going to be the Google of trading. Because like Google is a technology that scans the internet. And by scanning the internet, what does it do? It finds information. Well, this scans all these price patterns and finds information. All right, that's what it does. And that's what we're doing. And we're doing the same. We scan the internet. And look at this. Nobody else, not a single person comes anywhere close to us. And that's what we wanted to do. Because if you're building a global business, a global fintech company, where, like I said, I'm on advisory boards for Downing Street. I'm flown around the world by the government to promote fintech and my own fintech, this pipspredator, to encourage other entrepreneurs and teach them. You got to be the best in the world at what you got to do. Otherwise, who wants you? You might as well give up. You're never going to succeed. So that's why we did it this way. Okay, and like I said, you get to keep the books just for trying it because we're ambitious, we're aggressively ambitious as well in that regard. Let me show you the website. This is pipspredator.com, which for all apprentices is the starting point. They've got my WhatsApp number as well. By the way, if any of you are unsure about what I've said to you, you're also able, my friends, to schedule a call with me from the pipspredator.com website. You can schedule a phone call. You'll get access to my diary, including tonight, and you can schedule a call. If you've got a query before signing up, you can fill in there. You've got phone numbers, 24/7 phone numbers, WhatsApp numbers, Skype calls. For apprentices, This is our IT team who can install it for you if you've got any issues. Got a 24/7 number to get hold of me as well. You've also got my personal WhatsApp number as an apprentice. You've got direct line to my phones, my UK, US, and Hong Kong numbers, and a Skype number as well. And you can see me at the office. I can't do better than that. Our funds are domiciled in Luxembourg, and in Singapore. I'm not there. I'm in London at the moment. So come and see me at Brook Street, which is next to Claridge's, if you know where Brook Street is. You can contact me. So you've got all of this because I want my apprentices to succeed. All right. If you want to know beyond just some of the names I've just told you, regular people, these are just some of the ones I've put up. Malcolm, up 175% on my demo. Good. I want you to start off with the demo account. So I've shown this one. I want you to start from the demo account. All right. This is good. Very good. Thank you. Bernard Yoxel. I did enjoy the opportunity to investigate your site. Chance to try the indicator, for which I thank you. Also, extra books. I've no doubt many will succeed from this. Can't thank you enough for getting me in contact with me today and walking me through downloading the indicator. So we'll show you the customer service part as well, not just the money that they're making. 75% correct. Rajiv Kapoor. The point is that there's a load more, but what you want is you actually want the big names that on there, not just those regular people. We've, by the way, got a community site. You can search for anything on here. So you might say, oh, let's search on losses, Alpesh. Which articles have you written? Walk through cut losses and trade selection. Okay, and we've got a whole bunch. And so on this community site, you can also see our latest views and on Telegram. So we keep updating and all upgrades and updates are free for life. So we keep updating stuff and new ways of communicating all this, new ways of teaching you. Well, I'll show you the course material. Okay. And what this does is it makes sure you get to profitability no matter what. Okay. So it just shows, are you determined? Do you want to get to profitability or not? This is the 12-week course. We have a 30-day course and we have 12-week one. 12-week one, it's optional. It's all part of the parcel, part of the package. If you want to get to hedge fund status, the 30-day one is more if you just want to get up there and know. But you don't have to do either. You can just download the indicator and start using the manual. And what this brilliant course does, incredibly well structured, if I say so myself, it tells you all the details you need to know as well. Mind maps, infograms, shows you what some of the biggest hedge funds in the world are doing. It shows you all the latest data I get. So it's updated every week from Goldman Sachs. If I get information from UBS, the newsletter that we have as well goes on there each month. The daily news we get. So people go, bloody hell, each one of those things alone is worth what you're charging. And just a one-off fee, one-off for now. UBS Wealth Management, year ahead, Goldman Sachs, best, monthly, the media moves, all of this stuff. My London Stock Exchange interview, London Stock Exchange said, shit, we want you. They flew me actually out to Italy to give a talk. And they said, we want to do an interview with you on artificial intelligence and trading and how you're using it. So I did an interview with them on artificial intelligence. That's my London Stock Exchange. It's my London Stock Exchange talk called Exchanging Ideas. So we're talking with the stock exchange about that. So you can see sort of that kind of stuff as well on there, as well as, of course, trading, and there's ebooks and infograms. Guys, you know what? We're trying to blow your mind. Okay, you might say, this is too much, Alpesh. Well, you know what? All you have to do is download the indicator and use the manual. You don't have to do any of this if you don't want. But it goes through it week by week, okay, to get you to profitability. You don't need to go through all of this to be profitable. This is additional information, additional education. You know, when people say, oh, Alpesh, what if I'm too busy to trade? What do I do? And I give them advice on that. If you're too busy to trade, okay, what do you do? Let's break it down. We'll break it down, give them infograms, give them my mentoring information. Nobody comes close to this. Nobody out there has this much. You know why? Because when you've written 18 books, this isn't a big deal to put this kind of content out there. So when you've done them, Joe, it's gone through as well. Ramjit, yours has got, or Ramjeet, sorry, has gone through as well. I can see that. Good. I think we've still got a couple of licenses left. If there's any issues, people let me know. So we've got all of that information. Some people go, it's too much hard work. You don't have to do this. This is if you want to get to hedge fund level and certification. And by the way, what I always tell my apprentices is I certify you at the end of the course. So you've got it on your CV. And I've just certified somebody for a job at, Morgan Stanley this week. He's got a job at Morgan Stanley starting this week because he'd gone through all my materials. I filled in his CV for him, and then they asked me, they said, well, what's the education, all the rest of it. He's got a job at Morgan Stanley on the trading side. And I couldn't believe it either. I thought, wow, that's great. I want all my apprentices to join me on LinkedIn as well, please. Okay, join me on LinkedIn. Because there you'll see who I am and that I am the real deal, because LinkedIn shows you who I'm connected to, which verifies, a bit like blockchain, verifies, yeah, shit, this guy's the real deal. Okay. Sharon, equities, I just trade the indicator. So I don't look, I'll tell you what I've got at the moment, Sharon. on equities. We are long on Google. Going in tomorrow, we're long. You can see it there. But we were short earlier. We were short on the 30th. So we made money on the short trade. That's how you make money. You don't say view first. Oh, my view is this. And then work backwards, Sharon, and say, shit, so I've got to do it. What you say is, my view doesn't matter. What matters is what's happening in the market. And then that's my view. So my view is I'm long at the moment on Google for a start. And then I'll work out backwards. How much we can make, right? So you can see here what I've done. There's £1 billion worth of investments you can see there since 25. That's why the Prime Minister appointed me on various things. You can see that on LinkedIn. You can see how I've been endorsed by government and so on, and what I do. So if you want to know, we have a way to back. Oh yeah, absolutely. Sylvain said, if for example my computer completely crashes and is not usable, will we have a way to get back access? Oh, absolutely. It's for life, and we will reinstall it for you. So don't worry. We don't mess around with people. We don't charge you anything extra as well on all of those things. So don't worry about that. Sometimes people they worry about. We're not here to mess you around. We don't charge you, and that's why we made it for life. Because some people say, Alpesh, I haven't got time this month. What should I do? And I say, don't worry if you haven't got time this month. It's yours for life. They say, oh, well, I can't do it in 12 weeks. When does it start? When does it finish? I say, it starts and finishes whenever you want, because I'm always there for you. I'm always there. You can see our case studies of people. If you're an existing client, you can see where to go. You can book a strategy call with me. Check out the mentoring software, all from pipspredator.com, and it shows you what we do. Over there. All right. So I hope you're going to join me. The webinar cuts off. It's going to cut off because it's going to be almost 2 hours now. I will see if we've got any left. I'm afraid I will see. I think we have got 1 or 2 left. So try and get in there quick, because I'm not sure we've got that many left. Bryony, how much can you make? It depends how many trades you take and how much capital you start off with, but we'll walk through the business plan with you. We actually have an Excel spreadsheet which we have online forms you'll fill in as well. And it is 30 days, no quibble, money back guarantee. You don't have to do the mentoring courses. They're all part and parcel. Joseph has asked, can I do the indicator and not the mentoring? You don't have to do the mentoring. It's all one parcel. In future, the mentoring will be extra to the, it'll be 2,000, not for you guys. It won't cost you any extra, but in future for others, it'll be £2,000 a year for the mentoring, £2,000 a year for the indicator, because we think it's worth that, and that's what the venture capitalists want. But for now, it's just that does work on Forex and indices. Basically, the algo can pick up what the underlying instrument is, and there's slight differences on the AI part, but it works that out as well. Okay. Free upgrades are for life, updates of life. Takes 10 minutes to install, otherwise we'll do it for you. First-time traders are absolutely welcome. We walk you through that. The course material takes the first-time traders through the basics and really updates them. Some people do it in 30 days and they say, thanks very much, I'll keep the books, the money back. Yeah, all right, fine, if that's what you want to do. What usually happens in those 30 days is you've made so much that you're like, shit, I want this for life. Okay, others will just observe the market in those 30 days and go, yeah, I still want it for life because I know I'm going to make more than 1,000 it cost me. Simple as that. No, there's no upsells, there's no extra cost, there's nothing like that at all. Okay. We've got, you can see me on the BBC, the FT, Merrill Lynch, HSBC, the Financial Times books, all of this stuff. It's there. Okay. So there's no issues either on that. I'm going to make sure I've answered everybody's questions. If you want to schedule a call with me, just curious. Options, Dave, I used to do traded options, and then I did, because I got the leverage on them, but they became too costly in the UK. So I switched to CFDs, and I very rarely do options now, but I used to love them. But I used to do it for the leverage it gave me. But I only did straight calls and puts. Because the spreads were so wide and the costs were so great, I didn't do the more sophisticated strategies like the Iron Condor or Butterfly or whatever else. Okay. Why cities not spread bets? Your calculations don't include cost of trading. Simon, the spreads. My calculations do include the cost of trading, because if you remember, we said we're going to do 1.6% of the business plan. So we took in the raw gross number, and then we said our profit margin is going to be just 1.6%. So we're saying 90% will go towards costs, laziness, not executing trades, slippage. That's why. Sharon, currencies and commodities are fine. Absolutely. I've told you which ones I think are going to work better as well on that. Sylvain, now I've answered that one. Sadi, I'll have to send you crude oil later because I'm trying to look for the damn thing. I've got so many things to look for. It's not one of the ones I've looked at recently, so I might have to send you it later. No, I'm gonna have to send you it later because I can't find the damn thing on here. Okay, so don't worry, I will send you that one. It's not an issue. Crude's not one I've looked at recently, so I can't really. Oh no! Wait a minute! I found it. Let me show you the crude. Let's look at boom. It's not one I've looked at. If it's something I've not looked at, I start off with. Well, let's start off with 5 minute on here. Yeah, there was a short signal there. Couple of trades which didn't go anywhere. Then that one's been profitable again, and this one is short at the moment on crude. Okay, that's the 5 minute at the moment. All right, so that's Brent crude March futures. All right, so that's how it's looking. Good, nice, profitable one there. A couple which just went flat. You probably broke even on those. Then a medium-sized profit there, and one which is still open and it's flat there. Okay, so two nice profits. And the rest are flat. So 2 nice profits, basically net is the number on that one. Okay, listen, guys, it's going to shut off any second now. I'm going to have to go. Yeah, John, no worries, my friend. Happy New Year to all of you. Ethereum on my list. What about Bitcoin? I don't have a problem with Bitcoin. It's just that I think there's so much in the news. There's so much volatility, and there's so much going in opposite directions all the time. I don't have a problem with Bitcoin. I will try and pull that up with you. What I will say to you on Ethereum, look, there's my Ethereum chart. Okay, we're long Ethereum at the moment, and you can see why. It's just a bit smoother, is Ethereum. That's it. I'm not saying anything negative about Bitcoin. It's just that I think it's a bit like sterling US dollar. By the way, it's going to go any second now. I've been told it's time to wrap up because the system closes me down. All right, it's probably something my wife set up. Closes me down. Guys, I hope you're going to sign up. I hope to see you on the other side. I want to get you to profitability. Let's put it this way. I want to get you to profitability. And the reason I want to get you to profitability is very simple. I think trading's been the most fulfilling thing I've ever done. I think it is the best entrepreneurial venture, which gave me the most freedom that I've ever done. Okay. If you're unsure about me, have a look at pipspredator.com. It will tell you everything you need to know about why I'm as good as I keep saying I am. All right. And you'll find it all there. I don't think there's anybody any better. And we're lucky that we found a way of making this available to you guys and at the same time making it amazing. You don't have to start with any capital. You can start with $0. You can just monitor the markets, and that's how we created it like that. All right, there is nobody who competes with us. It's been 20 odd years in the making from when I first met these leading hedge fund managers to when I won the FT competition and set up my own fund in 2004 to launching version 6 this month of pipspredator. And all updates are free to you. Happy New Year, Michael, Derek as well. Okay, people want side gigs, entrepreneurial ventures. They want people they can trust. They're fed up with these teachers institute charging them a fortune, right? We've taken on about 200 I personally mentored each year since 2016. All right, and I've given you the names of some of those who've done incredibly well. Some do better than others, obviously. All right, some 10% give up, 90% continue trading at different levels of frequency. We've got everybody from part-time traders to full-time people. Like I said, I've got one guy this week who started off at Morgan Stanley. I keep forgetting the name. Morgan Stanley. And the advantage we have, they're listed there. This is it. These are the advantages. It's as simple as that. We beat everybody else. We just simply beat everybody else. And when you beat everybody else, that's when you get all that credibility. There's nobody else who compares. And yeah, as an entrepreneur, as a fintech entrepreneur, I may sound a bit cocky, and there's a reason for it. That I think we're that good. And this is our roadmap for the business. If you're interested, step 1, Q4 of this year, $30 million valuation, 1,000 profitable apprentices. Step 2, global expansion, using that capital, IPO in Q3 of 2022 and be a unicorn worth $1 billion by Q4 2027. So this is my decade-long plans. All right, just in case you're interested, if you care. And this is how we mentor, which I've already shown you. In-person courses, webinars, direct access to me, and even better, brand new this year, WhatsApp and Telegram as well. And on Telegram, as people saw, there's a whole load who made a killing on the FTSE trade that I gave them. Okay. Simon, I'll remember you to Paresh. Thank you very much, Simon. My pleasure. I will indeed. Paresh co-authored some books with me. Let me know how you know. Okay. Thank you all. It's a very good friend. Nice bloke. And I will indeed. So thank you all very much. I'm going to say a bit of a goodbye now, I'm afraid, because we're going to get pushed off any second. I'm going to direct you all to the page. And for those of you who are still here, if you're still here, look at that. This is my passion. We did basically what the founder of Amazon did. He was a hedge fund manager. Jeff Bezos was a hedge fund manager at D.E. Shaw, and then he set up his own technology company called Amazon, became the world's richest man. This is us. This is our technology. This is what we do. Okay, this is the business we're in. We're both a hedge fund and we're a fintech company, just like Renaissance Technologies. It's got technology in it. It's the world's most successful hedge fund, and it's a technology company at the same time. It is all about the tech, and that's why we wanted to release it, and that's why we think we've got something which is bloody mind-blowingly brilliant. I hope you'll join us on the journey. I want to thank everybody who's been part of this. Any questions I've not answered, I will answer them. Okay. Yeah, that's the idea, Clark. I want all of them to have free shares up to the IPO. That's the ambition. Okay. So yeah, Brian, thank you very much. Michael, thank you. Derek, thank you all very, very much indeed. I really appreciate it. Any questions I've not answered?